Hello, everyone. You know the name. You know the show, Shooting from the Hip number 10. You know the producer, Charles Finley. He'll be on the live stream. If you have any comments, he'll be collecting them. We got a great show today. We got 3 interviews lined up. The first is going to be with Ramneek Kundra. He's going to be talking about Facebook's recent investment, $5.7 billion investment in Geo. We got another interview with a developer at Compound Finance. Their founder put me in touch with him, so we're really fortunate to have him on as well. It's one of the most interesting projects in cryptocurrency right now, so that's going to be super fun. And then we have a third interview with someone who was recently quoted by billionaire investor Howard Marks, and whose tweets also appeared on CNBC. So this is an epic time for Shooting from the Hip right now. Again, we have Ramneek. Was just riffing with him before. We're going to bring him on in about 15 minutes. This is an epic time for the show, and I appreciate everyone tuning in because this is going to be fun. So I want to talk a little bit about, before we get Ramneek on, which is going to be epic. Again, that's about 12:15 p.m. Eastern time. Again, we're going to talk about Facebook's investment in Geo platforms. He's going to lay it all out for us. I want to talk a little bit about what I'm going to be focusing on, not only in today's show outside of the interviews, but also over these next few weeks. So again, I want to look at the slow-moving things that are happening right now that we may not notice because we're distracted. So let's wind the clocks back a bit. September 11th, 2001, those attacks, 9/11 attacks, that resulted in obviously the global war on terrorism, but it also created the mass surveillance state through the Patriot Act and these secret FISA courts that became to light when Snowden released with those Snowden leaks, and we found out the government was lying to us about what they were doing. So I'm worried about government possibly taking advantage of this situation to increase powers, and maybe in ways that we don't actually know about. We'll talk a little bit about another example, the global financial crisis, right? So what happened after the result of that? Well, a lot of things happened during the time, but if you were paying attention, what you saw was unrest. You saw the Tea Party come out of that. You saw populism come out of that. And I think you can draw a line from the global financial crisis to Trump in the White House. So these are the types of things that obviously COVID-19 is very serious. But I think what's even going to be more serious and what's going to have more ramifications for decades down the road is the fallout of COVID-19. We're going to beat COVID-19. The world's going to beat it. Yes, people will die. Yes, governments will spend a lot of money to defeat it. Now we're going to talk about governments going into debt to do that. But we will win. Humanity will win. The interesting thing is going to be, okay, what's the fallout? What are the scars? Morgan Housel often talks about there's going to be things that are going to heal, and there are going to be scars. So I want to focus on what are the scars going to be, because the numbers, seeing the daily numbers, the daily deaths, and things like that, it's easy to get caught up in this churn game of modern media. It's easy to get caught up on watching cable news and kind of seeing this daily thing. I'm not interested in that stuff. I'm interested in the slow-moving hippos, the slow-moving rhinos that will have an effect far beyond just what's happening today, this week, or even this year, even the next 2 years. I want to think in decades, because I think thinking in decades allows us to be the most informed and allows us to zoom out and take a very analytical and very bird's eye view approach on what's going on. Okay, so that's gonna lay out this show, and that's gonna lay out what my thinking is over the next several weeks. So again, we do this show every Saturday noon Eastern, 9 a.m. Pacific. As always, we have producer Charles Finley in the comments. We're streaming live, and this is the first time we're on Periscope. We also stream live on YouTube, Twitch, and Facebook video. If you want to ask questions or fact check me or tell me I'm wrong, we mostly check the YouTube live comments right now, so hop on that stream. We're going to try to be better about checking the other comments. I also want to thank Christina, my sister, who's supported me a lot in this, and also Lars, my first contributor on Patreon, who they're both contributors now. First contributor on Patreon, who I have not personally met. He's from Belgium. He's a great guy, and I appreciate that. As we're trying to build this show, Your support on Patreon. For those that don't know, Patreon, you can contribute to the show monthly. We really appreciate it. Me and Charlie, we riff on this stuff almost every day. We really think we're building something special here. We think we're cutting through the noise. We think we're covering things that matter, and not only things that matter today, but more importantly, that are going to matter a decade from now, because we want to keep you guys informed, and frankly, we want to keep ourselves informed. We want to read about things that are going to matter in a decade. Reading about things that are going to be irrelevant in a week or 2 weeks, it's not very fun. It's not that interesting, and frankly, it doesn't keep you the most informed. So as we try to build out this no gradient project, we really appreciate that support. The more contributors we have there, the more time we can spend on this. We're not close to break even at this point. Me and Charlie split this 50-50 right now. We're not close to break even. We do it because we love it. We do it because we're riffing on it, and we do it because we think we have something special here. We'd like to have fun. Okay, so quick rundown. I gave you a quick rundown on the intros. What we're going to talk about, the interviews. We have 3 interviews lined up. The first one in about 7 minutes. We got Ramneek coming on. Very excited for that. We have 2 other interviews. We have another interview right after that, 12:30 p.m., and another one at 1:15 p.m. Spread throughout this. We're going to talk about a few different things. We're going to talk about Bernie endorsing. In my notes I wrote Obama. No, I meant Bernie endorsing Biden. We're going to talk about the Biden presidency in general. We're going to talk about Medicare and Social Security. Again, this is one of those slow-moving rhinos that you may have missed. Medicare and Social Security, they put out an annual report. I believe it's annual. It may be quarterly. I believe it's annual, though. The trustees, the people that manage the money and manage the outlook and manage how long these things are going to last, they put out a report, and it's not looking great for to keep those social services solvent. The good news is, if we act, the sooner we act with them, the sooner we either limit spending from them or increase income into them, then they can survive. But right now the outlook is not good. We're going to talk a little bit about that. We're going to talk about the oil. You might have heard about negative oil prices. We're going to talk about how that happened. There's this great rundown that we're going to go through, just because I think it's super, super fascinating. We're dealing with a lot of firsts right now. And as I talked about, we're going to talk about the debt countries are racking up, and we're going to talk about a post from Mark Andreessen. It's time to build. I thought this was a really interesting post about how, Democrat, Republican, left, right, whatever it is, his whole point, and I think no one would argue that this is the whole point. The only way we're going to make things better is to build new things, is to build new processes, is to help people, empower people, because that's the way that we move. That's the way we move society forward. That's the way we're going to move our governments forward. That's the way we're going to move our companies forward. We have to build. We have to create new things. We have to create new technology. We have to. These are the things that are. We talk about this on the show. Increase the pie. If the government. People talk about government spending and how much, how to slice the pie, how much to redistribute, how much we should give in Social Security, how much how we should tax billionaires, all this stuff. These are all valid questions, but it makes it a hell of a lot easier to have this debate when you are arguing about an ever increasing share of the pie. So the more people, and we're going to talk about this with Ramneek. In India, what's happening in India, the more you empower people, the more you can allow people to create for themselves, give them internet access, education, things like that. The more that they can create, the more they can invent, and the bigger that pie, basically the more economic activity there is. That means, for those on the left, that means more social services, which are absolutely important and absolutely good. And for those on the right, that means that for those are more concerned with wealth and more concerned with creating new things. It's more for everyone. So anytime there's an argument that kind of transcends left or right, I really like to hammer down on it, because there's very few of them. I mean, I think there's more than modern media gives credit for, especially in the United States. I think a lot of people have, Democrats and Republicans have more in common with each other than often they give each other credit for. But frankly, it doesn't make for the best. It doesn't make for the best cable news. If you have 2 people on an interview, you'd rather have them yell at each other because it's more interesting that way. It doesn't inform you. Again, it doesn't inform you, but that's what gets the clicks, and that's what gets the views. So anytime there's something that transcends left, right, I really like to hammer it down. We can all agree that, or most of us can agree, that the vast majority, if the pie's bigger, everyone gets more. That is flat out That is flat out the case. And yes, we can dive into the details about who should get more of as the pie gets bigger. How should that be divvied up? Yes, that's an epic debate. It will never end. That debate will always be had. It will never end. But again, if the pie's bigger, we all win. So that's that. We'll talk about that post. We're also going to talk about right after Ramneek's interview. Then we have an interview with Max after that from Compound Finance. We're gonna riff on talking about how governments around the world in Hungary and China are using the pandemic to actually increase their own power and do things that that are going to last after the pandemic. And we're gonna talk about there's a lot of controversy in the United States right now with people protesting, and whether that should even be allowed. And I'm going to use these other examples of what's going on in other countries to kind of put these things in perspective, because yes, protesting and often results in large groups of people getting together, and that's not good for the spread of COVID-19. Absolutely, but there's the First Amendment. There's that sacred right in the United States of America. The reason that we fought the Revolutionary War was to give ourselves these fundamental rights. And there's a tweet, which we're going to talk about more, by Preston Byrne. He says, the surest sign of a free country is whether in the middle of an emergency, armed protest is still allowed. So this goes back to, I think it's Voltaire, right? This is the classic, I don't agree with what you're saying, but I defend your the right to say it. Now, this is a little bit different, right? Because when people are getting together and doing these protests, they can put other people at risk, right, by spreading the virus. So there is a wrinkle to this element, but I urge you, it's very easy to be dismissive of no one should be allowed to protest. Well, let's look at countries where you're not allowed to protest. Let's look at situations where, and we're going to talk about this, The Economist had a great piece on it. Let's look at cases when the government uses a crisis to limit civil liberties. And again, we saw this in with the Patriot Act. We saw this with the Snowden leaks. We saw this after 9/11. So I urge you to think about these things long term, because that's the only way to stay informed. That's the only way to think logically, because the things that happen today will reverberate through the decades, and it's important that we look at those things that are going to reverberate, not the things that are going to be gone in a week. So that's what the kind of show we're looking at today. Now we have these interviews are epic. We're gonna have a lot of fun with them. I'm super stoked about them. So we might not get to all this. Maybe we'll push it to the next show. We'll see how much energy I have. We'll see if things are flowing. We'll see if people are riffing. That's all good. Also, if you have any questions, any comments. Also for our interview, I don't know if we'll have time, but for our interview, our interviewees, so for Ramneek Kundra, who's coming up in about 60 seconds, brother, I see you on the screen. I love that you're ready to rock. I love it. We both got beards. It's going to be epic. If you have questions for them, Charlie's going to try to feed them to me. And I'm just telling him this now. So Charlie, try to feed them to me. I don't know if we'll have time, but if you have some questions, we'll see if we can dish it out to him live. And epic. So that's what we got lined up today. I appreciate everyone joining right now. And I'm going to go ahead and bring up, let's go ahead and transition here. I'm going to turn my volume on right here. Ramneek, I see that you are muted. I want to bring you on though now. Can you hear me? How are we doing, brother? Are you live?
All right.
Yes, he is live. Okay, I appreciate you coming on, brother. So I'm going to set the stage a little bit here. So for those that don't know, and I'm going to link to all this stuff, we have Ramneek Kundra on the show. He's actually joining us from New Delhi, India. I think it's about like almost 10 p.m. there, so we appreciate him coming on this late. But there was a recent investment from Facebook, $5.7 billion into geo platforms, and this was, as far as I can tell, and Ramneek, you can correct me if I'm wrong, but I think this is the biggest deal since the pandemic started. So he had an epic tweet thread about it, laying it all out. And I reached out to him. I said, dude, this is epic. Can you come on the show and riff on this? We're going to link to all that in the show notes. But Ramneek, can you just, thank you so much for coming on. This is epic to have you. Can you just start by just laying it out for those that maybe have not heard of Facebook's investment, and just kind of just lay it out for us what it means?
Yeah, so I tweet a lot, these days, and specifically more in during the quarantine. So yeah, I saw that Facebook invested about $5.7 billion in Reliance Jio, and it's the largest telecom in India. Uh, so I thought, why not write a thread, because I was looking at a lot of misinformation online and I wasn't finding a lot. So I was talking to this guy, Jerry Cap, his handle is on Twitter, and we were talking about it, and he was like, "You should do a thread about it because it seems like you know a little bit." So I did it, and I don't know how, but it got a lot of traction. Uh, so yeah, I would just say, like, so the misinformation was regarding, like, whether it's a good investment or a bad investment, or like India is overrated in terms of investing emerging markets, and China is a better place. So I saw all those arguments, and some of them are totally valid because it depends on your circle of competence, what you can understand. But if you look at Facebook, they basically bought about a 10% stake, like 9.99, which you are allowed as a minority stakeholder. And when they bought it, it was $5.7 billion of investment, and valuing Reliance Geo at $57 billion. Now there are a few things that you need to consider. If you are long Facebook or short Facebook or whatever, as an investor, whether you like Facebook or not. But what Reliance does is, it's a immense free cash flow generator. It's a huge conglomerate. It has various businesses. The biggest of those is a refinery business, and when you
And
look
and
at
that's
their
the biggest
refining
that's the biggest oil refinery in the world, right?
yeah, it's the largest refiner in the world. And so if you talk about, like, playing in the big boys league, so I wrote about, like, they are the league. It's not that they play in the big boys league, because they already had a commitment from Saudi Aramco for taking about 20% stake in in their refinery. So you can imagine, one hand they have, like, Facebook in digital services, and then you have Saudi Aramco. So they are playing, like, with the top guys in the area, in the corporate world. So I wanted to, like, just spread a word about it, like, what is it, how is it, how did it start. So the Mukesh Ambani, who is the richest man in Asia right now, he's he is one of the best and the most shrewd deal maker you would ever you know have heard of. But most people don't know about him outside Asia. So what Geo essentially is, basically, it's a big data network which connects about 1.35 billion people. Whoever has, like, basic, income, and even lower income group, they can access Geo. It's like $4 or $5 monthly plans, and you can basically have unlimited access to internet. I use Vodafone personally, and I pay about $4.6 a month. So I actually calculated, because someone told me that you said $4. It's not $4. I paid this, so I was like, I'm just putting it out there. Uh, so yeah, it's a big investment in terms of how, like, in monetary terms, but how it can transform Facebook's dominance in India. Already, Facebook is used by pretty much everyone.
Okay, so before we get,
In
because
India, and
you're about to touch on some big things here, Ramneek, and I want to, before we get into that, I do want to set a little bit of the stage for Geo's Geo platform's growth in terms of you called them the first new telecommunications company. I think it was a Mark I think Mark Zuckerberg in his post said or actually this was Ben Thompson. I think they invested about $32 billion to build out this network. And can you talk about the kind of the ramifications of how big this bet was and how absolutely, I mean, I don't think it's too bold to call it a revolution in India, where this company came in and gave millions and millions of people internet access.
Yeah, so in terms of new, I didn't mean like it's the best or anything like that, which it may be. It may well be, but in terms of new, what I meant was you don't see a telecom company being built from scratch. You haven't seen that in the last decade in the world, in the whole world. There is no new telecom company that came up. So and became actually scalable for people to use. So Geo came in India in they began in launched in 2016, and since then in 4 years they have gathered 400 million users. So that's like 100 million users per year on average, right? So if you look at the scale that these guys have, it's massive. It's there is no uh, there is no comp that I can find. Like the US has the population of US is about like 320 million, right?
Yep.
So like 320, 30 million. So Geo with 40%, like connecting 40% of India, which is like 400 million users, and they can actually reach 1.35 billion people, provided they have money to pay to them. But India being a primarily poor country, uh, everyone doesn't have that kind of money, even if it's $4, because poverty is real. So it's the scale that they have developed is just massive. It's breathtaking, and I don't think anyone appreciates it as much as you know. I don't think even Indians know the scale.
Totally, and
If you ask
I
an
didn't appreciate it until I saw your thread, brother. I didn't know that there was basically in the last four years, as you said, 400 million Indians have been brought online, and something Mark Zuckerberg said about 4 years ago when talking about the market in India, he said that for every 10 people that get internet access, one person is lifted out of poverty. So can you talk a little bit about in the last 4 or 5 years, the opportunities? Are you seeing new opportunities that Geo and this internet access really in general has created for the Indian population?
Yeah, so if you think about, so I'll just use like vague examples, because that just are the best ways to understand, because there is nothing that you can quantify here. At least I cannot. But the thing is, if you look at the slums of India, for example, earlier these guys didn't even have electricity. Once they have electricity and you have like basic necessity, then you have internet, right? If you have internet, then you can connect with the world, and you can basically have the same kind of information. If you're competent enough, if you are literate enough to read, you can have the same kind of information like you and I have, right? So we can go online and find whatever, and then get the information that we need. And you see the stars coming out on TikTok, and these guys are like real poor guys who are now making money because they are TikTok stars, or like YouTube stars. So that's the kind of scale that I have seen. There are many handles online in like YouTube channels, TikTok channels that I'm seeing. These people wouldn't have been on internet. Forget internet. These people wouldn't have been on anyone's radar if it weren't for Geo.
Totally.
So
Totally. And I think a lot of that, there is, to your point, there is the TikTok, there is the YouTube, there's the creative aspect. And another thing, um, and this was from, I think the Financial Times wrote this in 2018. For the first time, millions of Indians are able to access the internet to register for benefit payments, download school textbooks, or simply watch India beat Pakistan at cricket. The rapid growth in the telecoms network has encouraged some of the world's biggest retail and technology companies to plow money into the country. This was in 2018. Walmart announced the world's largest e-commerce deal, buying 77% of Flipkart for $16 billion. And Google is beefing up its India team, and Netflix plans to add 100 million customers in that country. So to your point, I think this is also expanding expanding not just current opportunities in India, but actually encouraging investment. That's hilarious. I just got a call from a homie. Okay, but actually encouraging investment from other countries. So it kind of has a double effect here, which I think is really cool. So can you also, just for a second, and then I want to get to the meat of this, and we're going to go a little long. I know I said 15 minutes. We're going to go a little bit. We're going to go longer than that, but I don't think people realize how important WhatsApp and Facebook is in India. Can you talk a little bit about that for a second? Hey, brother, let's see, you still there? Oh, yeah. So I'm just going to say that one more time. I'll speak a little closer because I got you a little further. So I was just asking, can you, how much, just to give people a sense, how much is WhatsApp and Facebook currently ingrained in Indian culture? Let's see. Okay, you know what? I think I lost him here for a second. Let's leave this here. I'm going to join the meeting again. One sec. We have technical difficulties. We're going to work through these. We have the question coming up. Okay. Let's see. Let's see. Are we live, gentlemen? Can you hear me now?
Yeah, I can hear you.
Okay, sorry about that. I just got a call from someone, and I think it might have messed up the audio. So Ramneek, I was just asking, can you just clarify for a second how important Facebook and WhatsApp are to the Indian market, and how much these are actually used by the Indian people?
Yeah, so Facebook, like WhatsApp, is as popular in India as probably Instagram in the US, right? So like everyone knows, like I wrote in my tweet, I said like probably WhatsApp is as influential in India as probably Seinfeld and Michael
Michael
Jackson
Jack, I
were
love
in
that.
the
Yep.
US. So like you don't appreciate the scale of these things, of these technologies like Geo and WhatsApp, and what they can do together. It's like even I cannot imagine. Like that's the thing. It's the possibilities here are endless. So you look at something like WhatsApp, you have even people like daily wage earners who earn about like $1 a day. They use WhatsApp on their feature phones. So
Right.
the kind of scale is just massive. If you want to order even a water bottle to your home, you can order it on WhatsApp.
Yeah, totally.
So
I think it's an
yeah,
interesting. Yeah, keep going. I want you to finish that point. Keep going.
so you can order you can order some probably you can order food, you can order. So you talk about all these platforms which deliver food to you and all those things, but once you have the phone number of the delivery guy or the restaurant owner, you can just message him on WhatsApp and they would just deliver it to you. It's even easier than probably using Grubhub or Seamless, right?
Totally.
Because you don't have to go through anything and you exactly know, oh, I'm gonna get a ramen, I'll just get the ramen. If I want to get a hamburger, I'll just get the hamburger. I'll just text the guy.
Right.
So it's just so easy that way. And it is tapping into all those functionalities in India which are unthinkable anywhere else in the world.
Totally. So
Probably in the US, because I know how the US is in terms of these technologies. Like I know an American would probably never message a restaurant owner that send me this on a WhatsApp message. They would just go to Seamless and do it.
totally. Thank you for
Yeah, because they don't want that kind of a conversation and
right.
all those things. But in India, it's totally different. I think it's a cultural thing. You're like, okay, I'll just call that guy.
Totally. So now why Facebook investing, and why at this time? What do they plan to do here? What's the strategic move from Zuckerberg here?
So I think personally, Facebook was running into a lot of regulations, and Reliance being not just one of the most influential, but the most influential company in India, beside HDFC. Uh, it's just gonna get very easy going forward. Not very, if not very easy, it's just gonna get less, very less, like less and less hard for them to get through the regulations. They won't run into many issues with getting clearance on payments. They won't get any issues related to e-commerce. They won't get issues related to the delivery of the products. They won't get issues related to getting FSSAI. Like it's kind of a food and drug, you know,
Food
like
and Drug
anything of
Administration.
India. They can easily get those licenses and all the permissions very easy if you have a partner like Reliance to you.
Got it. So I'm curious because we see this in the Chinese market. The government there making it very difficult for foreign firms to compete with those at home. So I'm curious if you think this sets a bit of a precedent that not, and granted, I'm not comparing China backing their countries and preventing foreign competition. I'm not comparing that to they're on completely different levels than what India is doing. But do you think that is it a little worrisome at all to you that you mentioned easier for regulations? Is it worrisome at all to you that a foreign country needs to make a huge investment, needs to, for lack of a better term, kind of buy access to the market? Or do you think this is, I'm not putting a value judgment on it, I'm just wondering, or do you think this is just part of the healthy way of doing business? I'm curious your thoughts on that.
So yeah, it is a very healthy way of doing business, because what happens in India is totally different from China, and it's very similar to what happens in the US. It's just the implementation in India is not that good. So if you think about it, uh, like India is a democracy, and it's a free enterprise system. You can go in, you can start. Like I can come in and I can start my company in India today, like no problem. But the hurdles that you have to face are much more than the US, but like they are uh, not as bad as in other developing countries, right? So
Got it.
if you think about like the government protecting the local competition or anything like that, there's none of that happening. Amazon is the number one e-commerce platform in India. They don't get any benefit, like they don't get any specific harsh treatment compared with our local people or businesses. And Facebook doesn't get any harsher treatment compared with other instant messaging services or social media platforms that are there. So these are dominant American companies in India. Facebook, Google, they don't get any harsher treatment compared with So it's pretty much like the US. So recently, what happened was a Chinese bank took a stake in India's largest banking company, financial company, HDFC, and they took like 1% stake. Earlier they had 0.8%. So once you have 1%, you have to report it to the Security Exchange Board of India, and they did that, and there was an outrage. Like why is Chinese company taking over an Indian company? Like it was just 1% stake. And why why is Chinese company taking over Indian company, and what's the deal with it? Why they want to do it during the pandemic, which was actually brewing in China, and world is suffering from. So all those like ethical and moral questions at this time, but at the same time, Indian government was like, okay, we are going to look into it, and we are going to like put some restrictions on Chinese companies taking over Indian companies. But then Chinese government actually sued Indian government because
Right.
they said like India is a free trade country. So you can tell that there is a rule of law that's there, that you can come in India, take over an Indian company, and sue India, and you'll be heard.
Right, right. It's a great litmus test.
Right. So like it's pretty much like the US.
Got it. Right. Okay. Cool. Is there anything I have one? I have another final question. But is there anything related to this deal? I always like to remind people um, that. I think people underrate Zuckerberg's as a CEO. The fact that he purchased Instagram for $1 billion before Facebook's IPO, right before Facebook's IPO, and the fact that he acquired WhatsApp for $19 billion. These are two moves that if he did not have control of the company like he does, he has a vast amount of control of Facebook, more so than a lot of other public companies, maybe even the most control. And correct me if I'm wrong on that. But do you think what do you think this move kind of says about Zuckerberg's legacy or him as a leader?
He's ruthless. He's one of the smartest guys in the corporate world. There's no doubt about that, and he's so confident. For him, it's about soul in the game. It's not just about money. You can tell that he doesn't use all his wealth or something like that. Like he's pretty much like in pretty much like Warren Buffett in terms of using his wealth. He lives humbly. He lives it, it's about mission for him. Like
Right.
he didn't sell out to Yahoo when he was like in his early 20s, right? So he didn't sell out to Yahoo for $1 billion just because for him it was the mission. He said, I read a thread on Twitter by this guy called Mostly Borrowed Ideas. So
Yes, I
this
think
guy,
I read that same thing. Yes.
yeah, well, he said, like, Zuckerberg at the time in his early 20s, he said basically, if he sells out, he's going to start another social platform. So,
Right.
like, it's
Right.
not for him. It's not even about fun. It's about mission. Like he wants to connect the whole damn world. Like he wants every single person on the planet to be on Facebook, to be connected, and it's real. And he is doing that. Who has done that? Like, if you think about it, who has done that? Except like probably Google. Who has done that? Google has given
Right.
information to people in terms of connecting all the bloggers of the world or the websites of the world, businesses of the world together with like the communities who actually want their products and want the information. But who has done that except Google and Facebook? And Zuckerberg comes to mind. Like he is the man behind this behemoth that he's created.
Right, absolutely. And Max, I know we got you on. We're gonna have you come on just next in just a couple minutes. I appreciate you coming on. But Ramneek, one more question. You mentioned in that tweet thread, which again everyone will link to. It's a very excellent thread. I highly recommend anyone interested in this deal read it. But you said long term, I stay bullish on the U.S. more than any other country in the world. Can you talk about that?
Yeah, so like the US is an amazing country. Like if you think about the US history, they created the largest and the best companies in the world. There is no country in the world which keeps on churning out companies like that. So you had earlier whatever like Nifty 50 era, you had Xerox, Polaroid. These companies dominated for a while. Then you had a behemoth like IBM at the time, and which is still operational. Pretty amazing that it's still operational. And if you had GE, which is almost like 100-year-old company. You have Disney, which is a 100-year-old company, 97-year-old company. So you have all these companies, and now you have the first $1 trillion company in Apple. Then you have second $1 trillion company in Microsoft, third $1 trillion company in Amazon, $4 trillion company in probably Google. So you have and $5th $1 trillion company in probably Facebook. So you have like all these companies one after the other, and I am 100% sure that a $2 trillion company will come from the US and a $5 trillion company will first come from the US. So there is no doubt because there is some meritocracy that US has because I lived there for 4 years. Like I got the job offers, uh, like I got the job offer 3 months before I was about to graduate. Probably I was lucky or whatever, but there were few even citizens of the US who didn't get the job in my class. So like that says something about the US, because they tell you if you have talent, you can actually progress. If you have talent, there is no stopping you. So if you have that kind of a culture or a broad corporate culture like that, I don't think and innovation definitely, like earlier you had companies coming out from Seattle, then you had companies coming out from Silicon Valley, then you had companies coming out from you had companies, great companies like media companies coming out from Denver, Colorado. So it's just phenomenal country to bet on.
Right.
There is no country like the US. And stability, definitely. If you want to invest in a country, and US is looked upon by the world as like they keep it on a pedestal, and they are very good at marketing. The Americans are great at marketing. The ingenuity, the authenticity is phenomenal. Like you see with companies like Facebook, Google, they are absolutely local companies in India.
Right.
There's no country which does that.
Right, right. Well, Ramneek, I really appreciate you running through that. You just got me all fired up about the United States and being a citizen here. I think a lot of people don't understand how lucky they are and how much
Yeah, they
opportunity.
don't appreciate it enough.
They don't appreciate it enough. I think you're absolutely right. This is an amazing country to be in, and I appreciate you coming on. I appreciate you sharing your thoughts. I hope we can talk again in the future, and keep doing your thing, brother. I know you said at the end of your tweet, you said you usually keep your ideas to yourself because you don't want to talk out of hand or talk about things you don't know enough about. But I encourage you to keep doing your thing. Talk about the things you do know about. So thank you so much, Ramneek, for coming on, and have a great sleep because you're probably going to sleep soon. So really appreciate you coming on. Thank you so much.
Thank you. Thanks for having me.
Bye.
Bye. Take care.
Okay, so that's Ramneek. Ramneek, you're actually welcome to stay on the call if you want, but just keep yourself muted. Let's see. We do have Max Wolf here. He's got the Bose QC35-2s I see plugged in, just like your boy has right here on the live stream.
Yeah,
So
that's right.
there we go.
Best ones.
There we go, baby. There we go. Okay, so let me just do a quick intro. We have Max. Oh, let me actually change the old. Let me get your mug up here. There we go. We've got Max Wolf from Compound Finance. We really appreciate him coming on. So, I want to set the stage a little bit here. Let me just stall while I just flipped to the wrong page here. Let's see here. Boom. Okay, here we go. So Max is an engineer at Compound Finance. He was one of the people instrumental in developing, and we're going to talk more about this. We're going to talk about what Compound Finance is, and we're going to talk about the innovative stuff they're doing with their governance model. And the founder of Compound Finance put me in touch with Max because he was instrumental in that effort. And just to level set here before I give the mic to Max, just so people know. So currently, right now, as I checked right before the show, there's $116 million worth of assets, worth of cryptocurrency on the Compound platform earning interest. So it's a platform that allows you to earn interest, and it's in my mind one of the most, if not the most interesting projects in cryptocurrency right now. The way I see it, there's prediction markets. We talked about that on a show last week. There's stable coins, which allow you to transact in U.S. dollars or any could be a euro or not. We're seeing mostly U.S. dollars right now, but it allows you to transact across borders using cryptocurrency, using those whoops. Now I transitioned. Boom. There we go. Now we got Max Wolf. Anyway, the third most interesting thing is the fact that you can earn interest on your cryptocurrency, which is a fundamental piece of finance to earn interest on your assets. So, Max, thank you so much for coming on, brother. And yeah, can you hear me okay? Are we good? Are we live?
Yeah, I can hear you great, and thanks for having me on. It's a cool podcast.
Yeah, of course, brother. Appreciate it. You were on early, so you got to hear us. Me and Ramneek riff a little bit. So I've never had people overlap like that, but thank you. You patiently waited your turn, and I love it. So can you just start by talking a little bit about, I gave a little rough overview on Compound, but I would love to hear your description of it from someone on the inside. And then we'll talk about, so just from a high level, assume that the audience doesn't understand or assume people are new to cryptocurrency on a high level, what Compound does, and then we'll move into this really cool stuff you're doing with the governance model.
Yeah, so you gave a pretty good intro. Compound is basically a protocol that you can use to earn an interest rate on your cryptocurrencies. We support a lot of the big ones right now that are on Ethereum. So USDC, DAI, ETH, and we can get into what those are. But yeah, it's really easy to use. You basically just supply crypto into the protocol and start earning interest immediately. Every borrow is over collateralized with a different cryptocurrency, which means that it's safe and you don't have to worry about any kind of a credit system or anything. And basically the reason people borrow and the reason that you can earn an interest rate is that people want to basically margin trade different cryptocurrencies against each other. So if you might want to go long on ETH or short on some kind of crypto, people also use it for getting liquidity on their tokens, that sort of thing.
Got it. So is that how you guys? Oh, go ahead. Finish that point.
Oh, I was just gonna go into the way it's built with the smart contracts and what that gets.
Yes, talk about that and talk about why that's so powerful, because I think it's people don't really grasp how powerful a platform like this is when the fact that it's not a central intermediary controlling all this stuff, and then part of that is what we're going to get into the governance. But yeah, talk a little bit about how this thing ticks, brother.
Yeah, exactly. So these sorts of services exist on sort of centralized crypto exchanges. So margin trading specifically, there are some exchanges that you can do that on that people might compare us to in a vague sense. The problem there is that basically centralized exchanges, you don't have custody of your assets when you're using them. There have been a lot of centralized exchange hacks. There have been a lot of malfunctions on centralized exchanges, etc. So to get into how smart contracts solve that, basically you can think of it as, first of all, Ethereum is basically you get trusted execution of arbitrary programs. So what that means is if you write certain code that handles money, as our protocol does, so our protocol says, okay, if you send us money, we'll possibly give it to someone else for some other use, and they'll repay with a certain interest rate,
right,
blah, 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 a bunch of algorithms. We write all these algorithms in something called a smart contract, which is a program that runs on Ethereum, and you get trusted execution of that smart contract, which means that you can be super certain that those rules will be executed exactly the way we wrote them and the way we intended them to be written, interpreted. And if, the way any good contract is written is that it's written in a way that nobody can steal the money all at once. The only person that can access the money is you yourself, the user. So that's the very first intro to what smart contracts are. There's a lot of other cool stuff that you get with it. You can use them globally. You can use them anytime you want, because we can start getting into this concept of decentralized, but we're slowly starting to take out any influence that we, the team, have over the protocol itself over time, which means that even if we shut down as a company, even if we face some kind of crazy legal action, blah, 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 any catastrophic thing, the protocol would still run exactly the way it was intended to run. And what's really cool about that is that it provides, of course, safety for users, less counterparty risk for those folks, but also developers building on top of us. We really want to act as like a neutral platform for them. So something that people can be certain isn't going to change. The fees aren't going to be crazy one day. We're not going to steal all the money one day. We're not going to shut down one day. It's always going to be a safe, neutral thing for you to build on, and people are really building cool stuff on top of Compound, and that's kind of what we're building towards.
Yeah, right on. So I think a lot of people, when they talk about cryptocurrency, they talk about, decentralized and you have access to your funds and the government can't shut you down. These are all very valid things. But I think another thing you touched on that is a very, real benefit is that people can audit this code. It's not just people within the company. Anyone in the world can look at the code and say, hey, there's a problem. This needs to be fixed. And I like, there's essentially a bounty. There's a bounty on the code of, call it 116 million, however much money is on there, however much money equivalent is on there, then that's a bounty. Or if any hacker can get into this, and you can think about this with Bitcoin too, with the market cap, and the dozens of billions or hundreds of billions. That is a bounty. If you can break this protocol, if you can hack into this, then that money is yours, or at least part of it is yours. So I think there's some inherent security in making these things in these things open. You did talk about margin trading and kind of these these technical things that your average, I think, person, your average person has a bank account, they buy things. They're not margin traders. Do you guys view the Compound team? Do you guys view this as, are you mostly targeted at those people, or do you mostly view yourselves as kind of like a way to make a savings account for the everyman, if you will?
I think of it as kind of a bridge between the two. As a borrower, you are doing a little bit more technical stuff. You're interacting with exchanges. You're taking on different financial positions on different cryptocurrencies. So, for example, our most popular one right now is ETH against dollars. As I mentioned, so you can go long ETH against dollars. But the average user also has a really easy experience here. So all they have to do is deposit a dollar equivalent stablecoin. So it's pretty much just like sending dollars into this smart contract, and after that it's hands off. So that's the same experience you have at a bank as well.
Right.
And
I think the kind of the mind-blowing thing, and because I've played with Compound, and there's some others that are similar to Compound that offer you interest rates, interest on your cryptocurrency. I actually want to ask about if you have any thoughts on the MakerDAO situation where some of their when the value of ETH was dropping, they had some issues with their contracts, and some people were getting liquidated. I'm curious. I want to hear your thoughts on that, but just quickly, just so people understand how I think powerful this is. If you can, and I've tweeted about this, but you can set up an interest-bearing account in a matter of minutes. Now, assuming you already have the cryptocurrency. Now, it doesn't take very long to get, but you can in very few worlds, in the financial realm, can you to have money in an account within a few minutes and have that money earning interest for you. You have to wait for transfer delays. You have to set up the account is often kind of a pain in the ass to set up. So I think it's crazy how much better the experience is, and how quickly you can spin up an interest-bearing account with a platform like Compound. So I just wanted to point that out. But yeah, so do you have any thoughts on how, because Compound came out of that whole crisis unscathed when the value of ETH and other cryptocurrencies dropped a lot. Compound remained, and correct me if I'm wrong, but I think you guys remained fairly stable, and no one got screwed there. But I'm curious how you guys were able to do that.
Yeah, that's a good point. So to give people a little bit of background, what happened with the MakerDAO liquidations on Black Thursday, as we affectionately called it.
Nice.
Basically the prices of cryptocurrency all fell across the board, more than we've ever seen it fall before. And because the way MakerDAO works is ETH is the collateral, and then you borrow a stablecoin against that. Over the course of a couple hours, all of the collateral was like, I think it was like 50% of the value or something like that. And also there was crazy congestion on the Ethereum network.
Right.
The way that MakerDAO works is that CDPs, which are the loan sort of things that they have in their system, the way that they're liquidated is by auction. So there's a 10-minute auction time where basically the way it works is someone has to pay back the DAI. In return, they get to seize the ETH collateral. If somebody doesn't pay back, if someone doesn't enter the auction within 10 minutes, or if someone submits like a ridiculously low bid within 10 minutes and nobody outbids them, they get to basically pay back less DAI than they should to seize the ETH, if that makes sense.
Right.
So what happened was that because there was such crazy market congestion, transaction congestion on the Ethereum network, and there was such poor liquidity for DAI at the time, it was really hard for people to make an auction bid that they thought was going to be profitable. And a lot of zero DAI bids went through and actually won. I heard that there was also actually a bug in the liquidator code. So they have like a bot that a lot of liquidators use, which use the same way to approximate gas prices. But I mean, that's the basic idea of what went wrong there. They
Right.
ended up with a $5 million deficit, which they had to later solve with the MKR token.
And how did and did anything like on Black Thursday did anything like this happen on Compound?
No. So we have a different system, which is that we don't rely on auction times. The theoretical reason why auctions might be better, and I think why they picked auctions as a mechanism at the very early days of MakerDAO is because it's a little bit less reliant on a price oracle in those extreme times. Right, so because there's an auction, you don't need a price oracle to set the amount that you have to pay back or the amount of ETH that you get.
Right.
Which is interesting, but as you can see, it backfires like crazy if it doesn't work. So our system is as everything in the Compound ecosystem is as simple as possible, and basically there's no expiration time for when you can liquidate a loan or a borrow rather, and because of that, we were able to liquidate everyone on time, and generally, there's no under collateralized positions.
Yeah, totally. Do you see this as
lose anything.
do you see this as one of the obviously there's pros and cons to everything. There are no solutions, there are only trade-offs, but for this particular for the oracles, do you see this as, in your mind, if there is a weakness in Compound, is this the biggest weakness that someone could get access and feed in incorrect pricing data from these oracles? And I know, and if you also in your answer want to talk about Coinbase's new oracle and whether you guys are going to use that, I know the founder of Compound retweeted. He seemed excited about it, so I'm curious your thoughts on that.
Yeah, I think that's a very, very astute thought there. The oracle is a very dangerous and vulnerable part of our system, or at least the most dangerous part.
Sure.
And that's why we spent a lot of effort trying to figure out how we can mitigate that risk. The Coinbase oracle, I think, is a huge step in the right direction. For most of the markets that we support, the biggest market is on Coinbase. Which is to say that the market price is the Coinbase price, just because that's where most of the trading action actually happens. So we've been working really closely with them to figure out the best way for them to expose their prices in a way that we can use on chain. We have this protocol that we're building. I guess it's like a subsystem of Compound, which we're calling Open Oracle. And the idea is that anybody actually can take Coinbase prices from their API and post them onto our smart contract, which we will later use in the protocol. And because Coinbase actually signs the prices, we can verify that on chain that the prices that you submit are from Coinbase itself. So our goal is to sign up a bunch of other exchanges and basically potentially take the median, or basically figure out what the best way to weight those different exchanges is, so we can have a really decentralized price feed that is also out of our control. So that's something we take really seriously. Security is a huge internal point of focus.
Totally. I'm curious because every time I look on CoinMarketCap and I look at the you mentioned that Coinbase, the Coinbase price is typically the is what you guys use as the market price because it has the most I forgot if you used the word liquidity or volume, but if you look at CoinMarketCap, and I don't know if these other exchanges are inflating their numbers, but if you look at the volume traded, Coinbase is, and correct me if I'm wrong, but Coinbase is usually not anywhere close to the top. So I'm curious if you have any thoughts on that, and I could be wrong about that, but it always kind of blows my mind that I'll look down and compared to the amount of trading on some of these other exchanges, are the volume is a lot higher on those. Is that something that you've seen?
Yeah, it's usually safe to assume that all of the lower tier exchanges are pumping their numbers.
Got it. Got it.
Because it's self-reported and nobody enforces it, and it just looks better if the numbers are pumps. Even if they're being honest, they can still do wash trading. If they're in places maybe where the laws aren't as strict about that sort of thing. You can generally assume that numbers from Coinbase are 100% correct. Though.
Got it.
Yeah.
Right on. Okay, I've always been curious about that. And just while we're on the topic, there's another kind of coin market cap thing. I think it's called Messery, or I don't know how to pronounce it. But it's kind of another thing that tells you the market cap of these cryptocurrencies. Is there something you and your team and like people in that industry use as like the gold standard, or are you guys mostly using coin market cap?
For prices, just casually we'll look at coin market cap. As far as actual volume numbers, to be honest, I'm not too involved in that. I might not have as good answer as someone like Calvin or Robert about that. But
sure.
I think Masari is better. I think they do some diligence to make sure numbers aren't fake.
Right. I think
there's like a bunch of blogs and research about exchange numbers.
Totally.
That I've seen.
Okay, cool. Well, speaking of your area of expertise, I want to shift over to the which is something you've had direct work on, the new governance token that you guys will be issuing. That's basically giving away your power, your team's power over the protocol, and giving it to other members. Can you give a rundown on what that's been like, what that's been working like, and just a high level what it is? Because it's blown my mind that you guys announced. I remember seeing the announcement that we're working on this governance comp token thing, and I'm like, oh, okay, this is some pie in the sky stuff. Like this will be here in 2 years, 2 years if we're lucky. And within a few months or something of the initial announcement, now granted you were probably working on it before that initial announcement, you guys, correct me if I'm wrong, I think it's done. Like it's working today. So I'm just huge props to your team. So can you just riff on what this means for Compound as a whole?
Yeah, it's huge for us. As you said, I think we maybe only announced it 2 months ago or so.
Damn, that's insane.
Under promise and over deliver.
Right.
Compound. It's a lot of teams have been talking about governance, and it's cool to have our system actually in production. It's in a bit of a sandbox phase currently, meaning that although it is fully activated, we own most of the tokens. The team and our investors own all of the comp tokens at the moment, which means that the balance sheet of Compound still has control over the protocol, although we have delegated to a few people in the community. We're really soon, looking at ways to distribute tokens to the wider community. So you can look out for that. But
yeah, do you have any plans? Because I posted that I was on Reddit and I asked if anyone would have questions for you, and one of the questions I got was, what will it look like for your everyman or anyone just to be able to go, if you'll be able to purchase a comp token, or do you have to be using the protocol to earn comp token, or how will that distribution process work?
It's actually unannounced as of yet, so
Got it.
I can't break too many.
No, I don't want to pressure you, brother. I don't want to pressure you here.
But I think everyone's going to be really excited about it. Everyone's going to have an opportunity to participate. Eventually, it will be a token that you can just buy as the same way as any other token.
Perfect. Yeah, because when this was live, I was like, okay, cool. Let me just buy a few, just have some fun with it, and maybe be able to vote on some things. And I couldn't do that yet. Is that the way that? And then I just want one more question, then we'll dive into what this how the token's going to kind of work and how this governance thing works. But is this let's see, what was that? Actually, you know what? Let's dive into how this is going to how this is going to work and how it's going to, people are going to be able to vote on different things in the protocol. Can you just walk us through what you'll actually be able to do with it, and also, why move to something like this?
Yeah, so it's basically taking all of those ideas I explained of why the system is built using smart contracts, just taking them to the extreme.
Yes.
Right. So from a user perspective, you wouldn't the sorts of things that Compound still has control over in the protocol, as you said, is the oracle. Right. We have control over parameters in the protocol. That means interest rate models, adding new assets. In some ways, we can actually modify the code of the protocol itself. Of course, there's like a time delay, and it's totally transparent, and we feel is still pretty safe. But those are the sorts of things that we want to give to the community and basically let anybody have a say in deciding. So as a user, you don't want to have to rely on a single entity or group to keep your money safe. Hopefully, you would prefer to rely on a really broad group of people or a trusted group of people.
Right.
And I think what you've seen with cryptocurrencies in general is that if you create a incentive kind of compatible system, it's actually really safe to trust, for example, like proof of work Bitcoin miners to do the right thing with your Bitcoin. So that's the way I like to think about it. But yeah, for users and developers, especially, I think it's a way for them to feel really confident about the underlying protocol. And we actually think that by aligning the incentives, if a developer on top of Compound can actually hold comp tokens, that will incentivize them to build even more interesting and broadly applicable stuff on top of us.
Totally. And I just remember what I was going to riff on earlier. And that, speaking of incentives, is this the way that Compound envisions? Is this kind of the way you guys envision how to make money off this? If you and the creators of Compound, if people start trusting the protocol, the value of the comp token will go up. Is that kind of how you guys envision that you'll make money from this? Or are you collecting? Are you guys getting any fees from the between the interest and borrow rates, or how does? I'm curious just about the financial play here for you and your team.
Yeah. So again, I can't talk too much about it, but one way to think about it is that there are protocol reserves that are collected upon borrows and collected from the interest rates. And those sit in the protocol and do nothing but basically provide a buffer for future borrowers and future suppliers, just in case the protocol is under collateralized or something crazy like that happens.
Got it.
And our thought is to continue doing that and not change too much. But you could think of that as a potential way that this token could have value if people that hold the token had say over what to do with those funds. I think that gives the protocol value. I think having say over which way development goes and which sort of things to add to the protocol has value. I think, all of those things are potential ways that comp gets value. Although, of course, that's up to the community. And
right.
As much as we can, we want to push that responsibility to our users, developers, etc.
So is the logical extension of this by the end of maybe 2 years down the road, when this is all done and the comp tokens are out there, anyone can vote on things, anyone can stake their tokens to vote on the outcome of these different proposals and stuff. Is it going to be at a point when you've basically cut the umbilical cord and it is fully, there's the only power over the protocol will be completely and 100% in these comp tokens?
Absolutely. Yeah. So even currently, most of the protocol is under the control of the comp tokens. It just happens to be that the community doesn't own the comp tokens yet. But if we want to make a change to the protocol today, barring a few minor things, we basically have to go through the same governance process that is going to be fully operational shortly.
Got it. And I always liked in any, especially I think a lot of people in the cryptocurrency space like to think about, points of weakness. Um, is is there a way with the comp token? Are you able to vote on adding new oracles as well?
Uh, Probably. I think the Oracle stuff is still a little bit under development. There may be sort of the same uh, sandbox stuff that we've been talking about.
Right.
Um, I think it's kind of TBD, but
Right.
yeah, I think the ultimate vision is to have literally everything be up to vote.
Totally. Totally. Um, and I want to be mindful of your time here. This has been super epic. But is there anything, and and you can link this back to Compound, or you can just shoot from the hip yourself here. Is there anything? I love asking this question to on interviews. Is there anything in the cryptocurrency space, blockchain space, that you feel is just people the consensus is wrong in thinking about? I mean, just as an example, like a lot of Bitcoin maximalists will look at Bitcoin and think that this is the one true ring. This is the only thing that everything else is quote unquote a shit coin, and they won't even look at any other projects. Well, that's one thing that I think, okay, that's ridiculous. Is there something, maybe not at that level, but is there something you're seeing that you kind of just wish you could just kind of shake people in this community, or even shake people that don't understand cryptocurrency in general? And is there something you'd want to say to them, or at least wish that they understood?
Man, I see a lot of bad takes out there, but
Right.
let me think of just one.
Well, it doesn't necessarily have to be a take. It could be a broad, like a kind of call it a category of takes. Like, do people, misunderstand how, oh, I can, one thing I hear a lot of people say, well, I can Venmo someone. Why do I need cryptocurrency? Well, try sending money. And I say, try sending money across borders. Try if you're in Europe, and you're trying to split a bill with some Germans, Italians, and French people. You're all at the table. I don't think that's actually ever happened to me. I'm trying to sound cool. That's never happened to me. But my point is, trying to send money to anyone outside of your own country is an absolute nightmare, and you get fleeced on fees. So that's one thing. Or, I say people in the United States can trust their government, they can trust their banking system, which you can't. In many countries, you simply can't. So I'm curious if there's anything like that you think, people within the community or outside the community are just not understanding.
Um, yeah, I guess I'll give you a few. I think the folks that are not in the community that I have conversations like this with, they, first of all, I think, like you said, they kind of underestimate the luxury of living in the States.
Right.
And how easy it is to use financial services here, interact with, money and other stuff globally. And they underestimate how hard it is in certain other countries, and the value that you could get if you were able to both just give basic services to those other countries, but also
Right.
unite all the countries in a single market, which is what I think all this stuff is going towards. Right? People that use Compound could use can interact, can supply crypto and borrow crypto, blah blah blah, from people in any country, anyone with the internet connection. And I think there's also just like short-termism when people talk about what this stuff can do today versus what it could do. So, for example, like 2 years ago, when I was first getting into all this stuff, people would say, all right, well, XYZ protocol is totally centralized. They have control over the Oracle and blah, blah, blah. But
Right.
you don't, it's hard for those people to see that, okay, well, we build governance, right? And although even today, people are saying, well, governance isn't completely ready yet. It's not blah, 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 right? But,
Right.
like, it takes a little bit of foresight to just see, the point isn't that it's completely done right now. The point is that there's a straight line between where we're at now and this crazy utopia where Compound is completely decentralized and anybody in the community can decide what to do with it. And role of the compound team is just completely different than it has been up till now. I think another big one is I personally like to think about the role of like synthetic assets on smart contracts in DeFi. Right now, a lot of people talk about it's basically dollars against Bitcoin or dollars against ETH is what people like to trade, with the smaller ERC20s being a little less interesting. But I think there are ways to get a representation of synthetic assets on smart contracts that aren't quite built yet, or are still in like the early stages, as the same way that a lot of these interest rate protocols were 2 years ago.
And when you say synthetic, are you talking about like getting Bitcoin on the Ethereum blockchain? Like being able to trade it?
I'm talking about getting Bitcoin on the Ethereum blockchain in a trustless way. I'm talking about getting potentially real-world assets on the Ethereum blockchain in a mostly decentralized way as well, right? So instead of looking at a security token sort of setup where you have tokenized real estate, blah, 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 which was a huge narrative like 1 or 2 years ago.
And bonds as well, bonds being issued.
Sorry?
Bonds being issued. I think there's been some experiments with banks with people issuing bonds on the Ethereum blockchain. Now they've been kind of limited in their scope, but on the order of millions of dollars. So it surprised me. There's a lot of stuff. There's a lot of stuff being built on Ethereum right now, and it's super interesting. But yeah, it's blowing my mind actually.
Yeah, so it's like, what if you could have an index of U.S. stocks?
Yes.
Something like Compound trading against a foreign currency like, the Japanese yen or something like that.
Right.
Like that's something that totally doesn't exist today. But actually, Compound wouldn't have to be that different to support that, hypothetically.
Right.
It's just it's useful to think of this stuff from a long-term perspective and what's theoretically possible compared to what's possible today. What if you could interact with this stuff through your Schwab account or something like that? It's
right.
Another interesting one. Like, what's the technical barrier there? I don't think there really is one. It's just kind of legal and procedural insecurity.
Totally. Well, Max, we got Muhammad Raza Panju coming on next. But Max, thank you so much for coming on. I just want to say you're one of the builders out there. You're one of the people pushing this to the forefront and really making strides. You and the Compound team and other people working on projects like these. So I thank you for your hard work, because it's super interesting to follow from afar, and I'm super excited. I really think there's something here. There might be something here. There is something here today, and it's only getting better. And to your point about short-sightedism, let's look at long term. Let's look at where we were 3 years ago. So Max, thank you so much. Keep doing your thing, and hopefully we can have you on the show again, brother.
Thank you. Thanks for the praise. Obviously, big shout-outs to the Compound team for making it.
Switch transition, get your picture up here, your beautiful LinkedIn face, and then your Twitter photo below that. Are you here? Can you hear me? Are we good to go?
Yes, we're good to go. I can hear you.
Yes, sir. Okay. Thank you. First of all, thank you so much for coming on. So people that have watched the show, they know I quoted this guy, your MTL broker. Well, I quoted him because Howard Marks quoted him. We talked about this gentleman on Shooting from the Hip number 7, and I'll link to that, but I'll also link to his Twitter, his little mini thread that was quoted. And I just want to just to get the record straight, so people know what we're talking about and know what kind of got you in this position with Howard Marks quoting you, and also you being quoted on CNBC. So huge congratulations to that as well. So I'm just going to wind the clocks a little bit back. And my first question to you, so I'll let you prepare a little bit, is how you would change this initial outlook, because obviously this was made, I believe it was covered in the March 31st memo. I think you made it around there a few days before that. So this was made almost about a month ago. And I'm just going to read it to the audience, and I'm actually going to put up the CNBC, because I have the picture of it on CNBC here too, which is super cool that your Twitter handle's up there. But I'm just going to read it, and then I want to hear if you would revise anything about it, or update it anyway. So I'll start. So Mohammed Raza on your MTL broker on Twitter, he laid out, if you remember a month ago when we talked about this, he laid out the two cases, both extreme in both the positive direction and the negative direction, on what he sees could possibly happen. So let's start with the bull case. Everything opens in 6 weeks, so that's basically 2 weeks from now, but we're going to let him kind of edit, and he's not saying this would happen, he's just saying an extreme case on the positive side, but everything opens in 6 weeks, the unemployed can go back to the old jobs or as true Americans bootstrap, economy back to normal within 6 months, $2 trillion in private equity dry powder, low gas prices and 0% interest rates pour fuel onto the economy. The roaring 20s mean the 2020s now. I love it. Here's the bear case, the negative case. Unemployment goes to 20+%. Everything does not go back to normal before at least a year or two. And in the meantime, there's a huge demand shock. The effects of the lockdown on businesses as well as the oil shock create depression-like conditions. And he concludes with this. He says, the contrast between these two cases is insane. I feel like one thing that will not change in either case is that large cap compounders will take on even steeper multiples and maybe critical supply chains move back to the U.S. So, brother, any update to that? Has your outlook changed? What do you think, brother?
Yeah, so first of all, thanks for having me on. I'm really happy to be here.
Of course.
So to answer your question, back then when I tweeted that out, I was pretty confused. Now I'm just even more confused.
Yes.
So,
I first of all, can I just say I love that so many people are out here trying to give answers, and Howard Marks, sounds like you're a fan of him. He's always asking questions. He says, we don't know the answer. There's so many things going around. We don't know the answer. So I love that you open up with you're even more confused than you were when you made this statement.
Yep. So I'll say that there's about 3 things that can happen to the stock market. One is we test the lows again, the lows of March 23rd again. We go back to all-time highs, or the markets stay roughly stagnant from now till the end of the year. And I think that there is reasonable justification that can be given to every single one of these scenarios, which is what makes building out a prediction thesis very difficult. And it's already difficult enough to predict what's going to happen to the broader economy. But then seeing this disconnect between the real economy and the stock market makes it almost impossible to predict how stocks are going to do. Now, what I would change about that little thread that Howard Marks quoted was, I think the bull thesis got weaker and the bear thesis actually got stronger. But what's curious is that the stock market went in the exact opposite direction, which is what's confusing. Obviously, it doesn't seem like any Western economy is going to be opening up its economy anytime soon. Though I do want to make a nuance there. I know Germany's weakened or loosened some of its restrictions, and people are now free to go out and shop, to go to stores, go to entertainment. But that's not what's happening. And the Germany is supposed to be coming out with its GDP forecast next week, and most experts are saying GDP is going to be down 6-7%. And the fact that people aren't going out and shopping, that makes sense to me, because that's what happens in recessions. People are afraid of losing their jobs. They're afraid of being caught in a credit crunch. They're afraid of not having enough money. So what do they do in that case? They start saving money as much as possible. And that's great for individual balance sheets, but the counter effect of that is that the economy sees less spending. So there's a lot of the bull thesis that relied on there being a lot of pent-up demand, but I don't think that that's accurate anymore. I think that even if the economy were to open up tomorrow morning, there's a lot of damage that's still to be seen, especially in the U.S., where 70% of the GDP is reliant on consumer spending.
Right. Yeah, there's this notion that, okay, the government can open things up, right? But then there's this notion of when do individuals feel that they are ready to go out and shop, which are two completely different things. It's not the government's timeline. It's every single American or every single citizen of every single country in their own house making the decision on what they're going to do with the dollars in their wallet, which is a whole whole nother thing that, how do we know each individual is going to act? So you mentioned that you're even more confused than you were when you initially made these statements. Now I'm going to take a shot in the dark because one of my biggest, and we've talked about this on the show. One of my biggest pieces of, the thing that I'm wondering and the thing that I don't understand because we've never been in this territory before is the action from the central banks. Now, particularly in the U.S., I've been more focused on. But is this kind of the money that they're pumping in, especially with this purchasing of junk bonds? Now, your average American doesn't own a junk bond, right? Now, they may rely on pensions that own these junk bonds, or they may rely, but your average American doesn't own junk bonds. It's mostly, it's an investment vehicle for experts in finance, for lack of a better term. So it's just. And I think a lot of people saw this whole thing of, okay, the Fed is now buying junk bonds. Where are we? So is that where your confusion's coming from? The central bank actions and how that's changing how the companies are valued in the equity markets, or where is your source of confusion coming from?
There's a lot of sources of confusion. Low interest rates are one of them, and how I'm thinking of that. But we can touch on that later. To answer your question about the Fed, there's a lot of things you can analyze in the Fed actions, but I'm just not 100% sure that the Fed's actions will be effective, because it seems that they're pumping a lot of money into the banks so that the banks are engaged and motivated to give out loans. Because what happens if banks start being afraid is that they stop giving out loans. People stop buying houses, they stop starting new businesses, companies start issuing less debt, so the amplitude of their operations comes down. And we saw in 2008 and 9 that the central bank was slow in trying to prevent this credit crunch from happening.
Right.
But now they seem to have acted very proactively and extremely quickly, which is probably a good thing, that there won't be a credit crunch. That being said, I think that the economy is facing a very different issue than it was in 2008. There may be some similarities, like maybe the over-financialization of the economy, but here it's the consumer. It's at the micro level that consumers are being impacted. In 2008 and 9, GDP was down only about 2%. Yes, the risk of people defaulting on their mortgages has been spread around a lot by the banks, but the consumer was still fine. Unemployment had not reached anywhere even near current levels. So I'm just not sure that I don't think it's a bad thing that the Fed is trying to prevent a credit crunch and adding as much liquidity in the economy, though you can discuss for a long time if it creates bad incentives. But I'm just not sure that the individual consumer is being protected enough, and how the consumer is going to fare coming out of this lockdown.
Right, totally. So just to touch a little bit more on that, creating the wrong incentives. A lot of even before COVID-19, before this pandemic, there were talks of people attacking the managerial class in boardrooms across America, and with their emphasis on, while at the same time increasing the debt on their company's balance sheets, they were also buying back their own shares. Now, I think people, and correct me if I'm wrong here, but I think people, misunderstand that share buybacks are actually a way to, they're not a bad thing. They're not a bad thing. They're a way to give capital back to shareholders. And who's a shareholder? Basically everyone with a 401k account, anyone that's ever purchased a stock, anyone with an individual retirement account in the U.S., you're a shareholder. This is the money going back to you. Where I think it gets a little weird is when at the same time these companies are raising debt, they're also buying back their own shares to increase things like earnings per share, and then thus increase their own potentially their own compensation of CEOs. So this is a big concern, and a concern before the crisis. And I'm wondering if you have any thoughts on this.
Yeah, about share buybacks, I'm not necessarily against them. I do think they're a tool that can be used for shareholder good, for long-term shareholder value creation, but they can also be a tool of destruction of value. Um, I, I just I'm not sure what the right answer is. I don't think the government should step in and start telling companies, yeah, you can't start buying back your stock, because it can
Right.
be a very valuable tool. If the company finds that its shares are trading at a deep discount to intrinsic value, they absolutely should be allowed to buy back their shares. Just in the hands of certain management personnel, it can be a tool of destruction, and certainly for many companies, it has been a tool of destruction. The thing is, for the airlines, you have to invert, and think of the alternative. What would have happened if all these companies had a bunch of cash just laying on their balance sheet? I think it's very likely that activists would have stepped in, then forced the company to buy back shares or do something dumb with that cash. So
Right.
I agree. I absolutely agree um, that share buybacks can be used negatively, but it's difficult. It's difficult for me to say, oh, there's something here very clear that should be done about buybacks. It's really in the hands of each company. What I'm doing as a shareholder there is I care a lot about value creation. So if I see a company engaging in value destructive buybacks, I'm just going to stay away from them.
Right. I appreciate you sharing that. Now, are you having a moment, and you're closer to this stuff than me. You're buying individual shares in companies and all that. But are you having a moment right now at all where you're worried about the dynamism that has made capitalism successful for so long? Do you feel that we're kind of at a crossroads right now, or is that blowing this up too much? Is this something I'm an optimist at heart. I think we're going to get through this. I think things are going to be okay. I think we're going to be better off in 100 years, 50 years, 40 years. But that doesn't mean we can't ask questions. That doesn't mean we can't steer the ship so that bad things don't get worse. So I'm curious if you think this is some kind of crossroads moment, and you're worried about what capitalism is going to look like in 10 years. You're worried that these companies that know that if shit really hits the fan, so long as it's spread enough across enough companies, then we will get bailed out by the Fed or with stimulus. Is that something you're worried about, or is that something a little chicken little sky is falling stuff that doesn't keep you up at night?
Yeah, I'm definitely a bit worried about that, but I think that being said, I want to be careful with my choice of words, because capitalism itself is very. I see it as this very pure economic theory. I look at capitalism of Adam Smith by reading Wealth of Nations, and then I read the Communist Manifesto by Karl Marx. And when I look at the current economic system, I think Karl Marx would be seeing a lot more similarities um, with what he wanted in an economy than Adam Smith would. So capitalism itself, I think, is pure, and nothing can change that. That being said, I agree with you. I do think that there's a lot of bad incentives being built in. There's, the Fed buying, for example, all these. Um, they started buying junk bonds, whereas before they were holding themselves just to investment grade bonds.
Right.
And then there's talk about if equities go back down, then they might start buying ETFs or individual companies' common shares, which is which I think that would be
Which
pretty alarming.
which Japan
Because
has been
they're
doing.
exactly that's exactly what Japan's been like, and I do think that the odds of the U.S. having a bit of a Japan-like situation does seem somewhat likely. I'm not saying it's going to happen. I'm not making any
Right.
predictions.
Right.
But I think that we should be able to entertain that scenario. I mean, Japan has been a deflationary environment for the past 25 plus years, despite record money printing by the central bank. Um, the financial markets are pretty much nationalized, with the central bank buying investment grade bonds, also junk bonds, and also equities. I think it does seem likely that that the U.S. maybe does something like that. Yes,
Right
that
on.
is indeed a very worrying thought.
Right. Right. Um. Uh. is there something, if that is a worry? I'm curious, and I do want to ask you about, because constantly I talk about it on this show, so I'd love to have someone who's basically focused on individual stocks and finding the needles in the haystack. I constantly talk about just index investing on this show, and just for the vast majority of people, buy the index, fall asleep, wake up in 40 years a millionaire. That's kind of my take, because if you look at the actively managed funds, a lot of them don't beat the market over the long term. The likelihood you beat the market over the long term decreases for every year the fund is active. So I'm curious, as a I don't know if you call yourself you're an investor. As an investor, what are the types of moves that you could, I don't want to say necessarily hedge, but that you could make to possibly benefit off of a situation where where your fears of the U.S. getting itself in a Japan-like situation? Is there a way to protect against that with simple equity trading, or is it something that you got to buy gold or Bitcoin or something like that?
Well, it's a tricky question about how to hedge against that, and I don't think it's us going to Japan-like situation. It's too early to tell whether it's high probability.
Right.
So it's difficult to tell you how I'm going to hedge against something that I think right now is low probability, but I'll tell you what I'm doing with my portfolio right now. I've always been a fan of high quality companies, companies that can compound capital at a very high rate every single year for a long time, that are kept in place by strong competitive advantages, preferably by regulation. And what I'm doing right now, and I do think that I tweeted about that in that little thread that Howard Marks quoted.
Right.
I do think that these companies right now, they're trading at high multiples, 30, 35 multiples, but as long as rates stay low, and they might even go negative as soon as next week, I think there's a very real possibility that we see these companies trading at 40, 45 times multiples.
Wow.
It's worrying. It goes against everything I was taught as an investor, but I do think it's a real possibility. But what I'm doing to hedge right now is I have right now about 40% of my portfolio just there in cash, and I'm just waiting. Sort of, I feel like I have kind of a gun with the trigger ready.
Right.
The gun's full of cash, and then if the market drops again, I'll start buying my favorite companies that can compound capital at a very high rate. That's what I'm doing. I think a lot of big investors, I think, are also very confused and also have a very high cash position. Like, look at Warren Buffett and Charlie Munger at Berkshire. Charlie Munger had an interview with the Wall Street Journal last week, and he was saying how he's also quite confused right now. He doesn't know what the market's going to do. But Berkshire's cash balance, I think, is almost 30% of their market cap.
Right.
Carl Icahn this morning was saying he's raising cash. He's short commercial buildings. David Tepper is also a bit confused. So you see all these big investors with high cash positions who are similarly confused, and that's the situation that I've also that's the position that I've also taken.
Right on. And I'm curious what you think of the fact that I saw this tweeted out a few days ago, that the 5 biggest stocks in the S&P 500 have a weighting equal to the bottom 350 stocks, and this is up from 282. The bottom 282 stocks in July 2018. Does that tell us something? Is that an important thing to look at? What does that make you think?
So I think, yeah, it's interesting, and yeah, the closest period I saw a comparison like that made that the 5 biggest companies of the S&P and of the Nasdaq made up 20% of the overall index, and that was also a similar situation as 2000 at the height of the dot-com bubble. The thing is, back then interest rates were much higher, something like in the 3 or 4% range, if I'm not mistaken. It might be a bit different, but they most certainly were not at zero, and they weren't on the way to going negative. So, and that's another confusing part. If interest rates were at 2 or 3%, I could tell you, yeah, we're in a bubble right now. There's no way these valuations of publicly traded equities are justified. We're going down. There's no way we can stay at these levels. But that's the thing, is there's a lot of capital right now in the world from institutional investors, pension funds. Where's that money going to go? They need to get high returns to pay out pensions for their
Right.
how do you say, the people who are depositing money within the pensions.
Totally.
Interest rates are at zero. Where is that money going to go apart from equities? Where are they going to get those high returns? I'm just not sure. So it's difficult for me to say, yeah, this is just as alarming as 2000. It would be if interest rates weren't this low.
Right. Um, uh, so I love asking this question. I asked the last question. I think you heard. For people for people I have on the show, is there something the Wall Street Journals, the New York Times, the CNBCs of the world are getting wrong in talking about this narrative? Is there something that you're seeing, that you're reading, that you say, that a lot of that's getting clicks, that's getting reads, that a lot of people are repeating on whether it be cable news or in the newspapers, that you think is wrong, that you think needs to be addressed, and that you wish more people understood was wrong?
Yeah, that's an interesting question. I think the market and all these mainstream financial news networks, I don't think they're doing a good enough job at highlighting a very fundamental truth of the markets, and that's that belief drives capital flows. Um, and that's what we saw in 2007, 8, and 9. That yes, the mortgage market was not in good condition, and delinquency rates had reached very high levels, something around 8%, but yet the mortgage market didn't collapse until investor sentiment had completely turned around. Um, and so that took at least a good 6 months for the mortgage market to collapse because consumer sentiment had stayed positive for so long. So I think that as long as consumer sentiment, as the sentiment of investors doesn't change, I don't think we can test the lows. That being said, I think that there's a lot that could change consumer sentiment very quickly. Like some examples, the large tech companies, which many of these tech companies are part of those big five of the indices. They're reporting earnings this week.
Right.
They perform badly. Maybe the market's not going to like that at all. There's that. There's the fact that they're saying there's a lot of pent up demand right now. A lot of the financial news networks are saying that. But how about the fact that maybe there won't even be enough supply to deliver on this demand? There's a lot of stories breaking about a lot of the meat plants in the U.S.
Right.
being contaminated. What if the U.S. can't deliver meat to people? That there's a lot of construction has come almost grinding to a halt. What happens if people want to buy houses? There isn't enough construction to answer to demand. So even if companies want to sell houses or food, they might not be able to. So I think there's a lot of things that could trigger consumer sentiment going south, and I don't think the market's pricing that in, and I don't think that the mainstream news is talking about that enough.
Got it. Well, as I've read, never bet against the Fed. So I wonder if if, as you say, those things come to pass, if the Fed will come in and prop things up again. So I want you to get your buying opportunity, brother, but I also want to make sure that, I want to hopefully we get through this, and your average person's you're doing okay through this. We get out of it as soon as possible and open up this economy as soon as possible. Economy around the world, everywhere. One final thing. I'm curious, because I talk a lot about index investing on the show, and I'm curious what your thoughts are. As I said, my position is for your average American, your average citizen anywhere in the world, really just buy an index fund, and let it ride. I'm curious. How do you feel about that as someone that is, I think by definition, attempting to beat the market by picking winners and selling losers? So I'm curious what you say when people just bring up index investing, or how you personally feel about it.
Yeah, it's a very good question. First, there's a nuance I want to make. if you're talking about American indices like the S&P 500, the Nasdaq, the Dow Jones, then
Yes.
I think that's a great strategy. I
Yeah,
don't think
totally.
the entire world's indices are in great condition. For example, I live in Canada, and the TSX index at the March lows was trading roughly where it was in 2000. So you had
Wow.
like 20 years of just a zero return.
Right.
But for the purpose of my argument, I'm gonna stick to the assumption that an investor wants to invest in American indices.
Yes.
I think that that's probably a good strategy for the average investor, and just because I realize by investing, by researching companies and industries, how extraordinarily difficult investing is. It's probably one of the most difficult arts in the world. And
Absolutely.
unless you're willing to dedicate a big chunk of your life to it, it's almost impossible. And even if you do dedicate a big portion of your life towards becoming a good investor, it's extremely difficult to reach that point where you're beating the markets. Because a part of the difficulty behind that is when you're investing in a company, it's nice to know that they've performed well the past 10 years, but what are the next 10 years going to look like?
Right.
And that's extremely difficult to predict. And I'll be honest with you, I've been investing for 4 years. I've beat the market in only 1 year. I wouldn't say right now that I'm a great investor or even a good investor. I'm just hoping to reach that point sometime in my life, and I'd be happy with that. The reason I invest isn't just to beat the markets. It goes beyond money, I find. It's about learning something new. It's about playing this really wonderful game. It's about achieving something really great. That's something that very few will ever achieve. So it goes beyond money. If my motivation was just beating the markets, I would also just sit back and maybe just put my money in an index, but I most certainly wouldn't be picking individual stocks.
Right. Absolutely. I love how humble you are. I love that you're not making declarations. You're asking the right questions. So Mohammed Raza, I really appreciate you coming on. If you guys want to follow this guy on Twitter, your MTL broker. He is. You can see him on the stream there. You can see his Twitter right there. So, brother, thank you so much for coming on. I look forward to following you and following your analysis. And I hope we can talk again. And yeah, thank you so much, and best of luck.
For sure. Thank you so much for having me on.
Okay, brother. Okay, brother. Have a great day. Okay, that was Muhammad Raza Panju. We brought him on. He was, as I said at the beginning, he was quoted by Howard Marks, and then he was also quoted on CNBC. So he had some really interesting ideas about what the future outlook is for the markets. So now we're going to get in. So we're at people. I'll be straight up. These interviews went longer than I thought. It's 1:48 p.m. I keep saying I want to keep these shows to 90 minutes. I think that's where that's kind of where the sweet spot is. But I'm going to keep. First of all, I got to be honest. I got to take a piss, so I'm going to pee. I'm going to be right back. We're going to talk a little bit, at least cover one more topic. The big topic I wanted to talk about was the governments in these taking advantage of this crisis, especially in China and Hungary, and talk a little bit about that old First Amendment thing, because I think these are important things to look at. As I mentioned at the beginning of the show, the Fukin. These big events, the global financial crisis, 9/11, there is major scars that are left from these events, and I want to talk about the scars. I want to talk about what are the things that are going to change for good, because those are the things that I think are the most interesting, and those are the things that are going to matter in a decade. The number of deaths or the number of cases today will not matter in a decade, but things like the governments around the world instituting new things, taking advantage of new technologies to spy on their citizens. I think these are some interesting questions. So I'm gonna be right back. I'm gonna put a little music for you. We're gonna play a little music while I'm gone. I will be right back. We're gonna riff on that. Also, Charlie, if there's any questions in the comments, that kind of get those ready, because I think we'll go about another 15 minutes. Damn, I got so many pages and so many things I want to talk about. We're going to keep going. We're going to have some fun with it. I will be right back. Charlie, I can see your face right there. Okay, I will be right back, people. I've been drinking too much water. I'll be right back. Stay strong. Okay, I'll be honest, people. I did not wash my hands, but that's the reality of where we are. Okay, we've got. Thank you for that question. Okay, we're gonna riff a little bit more here. We're gonna see. We got nice things chiming in. Always appreciate it. Okay, we're gonna riff a little bit more here, and I want to talk about a couple examples here. We talked at the beginning of the show about kind of how easy it is to dunk on some of these protesters in the United States specifically. And the only point I'll say is that, do I agree with their protesting? No. Do I think that these governments are infringing on their rights? No. I think governments are doing necessary things because the unknowns with this virus are still there. I do think that we do need to open up the economy as soon as is safely possible. You look at, it's very easy, I think, for a lot of those in white collar jobs to be able to continue to do their job, continue to feel valuable, continue to feel like they're providing something. And when you're locked in at home, not able to work gives people purpose, right? And I think it's very easy to kind of turn your nose up and look how crazy these people are. And yeah, do I think is this the hill that protesters need to die on? No, but I will say I'm a huge fan of protests in general, and I will always support anyone's right to protest, no matter what it is, especially in the case of a crisis. Now, I'll tell you this: the one wrinkle here is that they are putting other people's lives in danger. If they're spreading it among themselves, they're going to spread it to other people. That is a very real concern. But we're going to talk about, and I don't doubt that for a second. But let's I think people, it's funny when people bring up the Constitution, kind of use it as a toy, and they only bring up the amendments that they think, recently we've heard about the 10th Amendment, which is states' rights. So people have been, championing that, and they kind of use it when it's politically convenient for them. But I'll tell you this, the First Amendment: Congress shall make no law respecting an establishment of religion, or prohibiting the free exercise thereof, or abridging the freedom of speech, or of the press, or of the right of the people peaceably to assemble and to petition the government for a redress of grievances. So people, these are literally, in our Constitution, these are people that are protesting what the government is doing. The First Amendment was set up so that people could protest safely and peaceably, of course. The protest, specifically government action. So what are these people doing? They're protesting the lockdown. Do I agree with them? No. Do I think we should make protesting illegal? Absolutely not. And we'll talk about specific things that specific things here. But I think protesting is a very American thing. I think it's the reason we fought in the Revolutionary War. I think it's a beautiful, beautiful, beautiful sacred thing that every time I protested the Trump inauguration, I protested the day after he got elected in the streets of Boston. And I got to tell you, it is an exceptionally sacred and beautiful right to be able to go out in the streets and not be gunned down, tear gassed, or locked up in jail. That is a very, very, very sacred thing. So yes, it's easy. It's easy to call people stupid for protesting. I hear you, and I think the people protesting. I'm not out there protesting because I don't think this is something to protest. I think there's unknowns, and I don't think people should be protesting. But it's a sacred thing. You cannot outlaw protesting even during a crisis. It is too sacred. What's it take for the government to just issue a crisis next time and say, we already didn't allow protesting before. This is just precedent. You can't protest right now because there's another virus. It's like, well, that's a very dangerous precedent. So I want to talk about, The Economist had a great piece. So it said it's called Autocrats See Opportunity in Disaster. And it's talking about how governments are currently taking advantage of the situation to increase their power. So we'll talk about this. And I would love to get someone from Hong Kong on the show next week. I would love that, and someone from Hungary. I would be so if anyone knows anyone like that would be willing to come on the show, I'd really appreciate that. But I'm going to read some quotes from this article. So rulers everywhere have realized that now is the perfect time to do outrageous things, safe in the knowledge that the rest of the world will barely notice. Many are taking advantage of the pandemic to grab more power for themselves. Now, granted, the United States is a free country, and I love the United States. I love what's going on here. I'm not saying we're China. I'm not saying we're Hungary. I'm not even close to what I'm saying. I'm not saying that the protesters here, are in a similar situation at all to what these kind. I'm saying they're not in a similar situation, and that's a good thing. I'm saying it's a good thing that people have the right to protest here and the right to organize. So let's talk about countries where that's not only not as freely allowed, but where it's actually being they're not only their right to assemble, but their rights, other rights are being hampered. So let's talk about that. So China's actions in Hong Kong are especially troubling. Since Britain handed the territory back to China in 1997, Hong Kong has been governed under the formula of one country, two systems, by and large, and its people enjoy the benefits of free speech, free assembly, and the rule of law. Foreign firms have always felt safe there, which is why Hong Kong is such an important financial hub. But China's ruling Communist Party has long yearned to crush Hong Kong's culture of protest. So and let's see, here's where it gets interesting. In specifically Hong Kong, Article 22 of the Basic Law, a kind of mini constitution in Hong Kong, bans Chinese government offices from interfering in Hong Kong's internal affairs. That was always understood to include its liaison office in Hong Kong. But on April 17th, the office, China's main representative body in the territory, said it was not bound by Article 22. This suggests that it plans to step up its campaign to curtail Hong Kong's freedoms. I'll be honest, people, I did not hear about this at all. Until I read. This was April 17th. The date is fucking April 25th. This was, fucking over a week ago. I did not hear about this at all. Why? And I bet you didn't hear about it at all either. And I bet you didn't hear much fuss about the Patriot Act either. There are things happening right now, and people can't have their attention drawn to them right now because there's simply there's a pandemic going on right now. So governments are using this as an opportunity to curtail freedom. So there's also, take Hungary, where the Prime Minister, Viktor Orban, and again, I would love to get someone from Hungary on. So if anyone has any Hungarian, anyone knows anyone from Hungary, I would love to have them on the show next week because I think these are super important things. So the Prime Minister, Viktor Orban, has been eroding checks and balances for a decade. Under a new coronavirus law, he can now rule by decree. He has become, in effect, a dictator and will remain so until Parliament revokes his new powers. Since it is controlled by his party, that may not be for a while. Hungary is a member of the European Union, a club of rich democracy. Yeah, Hungary, it's in the EU. This isn't some, this isn't a country that you would expect, some member of the EU for this to happen. Yet it is acting like Togo or Serbia, whose leaders have just assumed similar powers on the same pretext. Everywhere people are scared. Many wish to be led to safety. Wannabe strongmen are grabbing corrosive tools that they've always craved in order, they say, to protect public health. Large gatherings can be sources of infection, and we talked about this. Even the most liberal governments are restricting them. Autocrats are delighted to have such a respectable excuse for banning mass protests, which over the past year have rocked India, Russia, and whole swaths of Africa and Latin America. The pandemic gives a reason to postpone elections, as in Bolivia, or to press ahead with a vote while the opposition cannot campaign, as in Guinea. Lockdown rules can be selectively enforced. Azerbaijan's president openly threatens to use them to isolate the opposition. Relief cash can be selectively distributed. In Togo, you need a voter ID, which opposition supporters who boycotted a recent election tend to lack. Minorities can be scapegoated. India's ruling party is firing up Hindu support by portraying Muslims as COVID-19 vectors. Fighting the virus requires finding out who is infected, tracing their contacts, and quarantining them. That means more invasions of privacy than people would accept in normal times. Democracies with proper safeguards like South Korea and Norway will probably not abuse this power much. Regimes like China's and Russia's are eagerly deploying high-tech to snoop on practically everyone, and they are not alone. Cambodia's new emergency law places no limits on such surveillance. There's also this notion of false information about the disease. So many regimes are using the truism as an excuse to ban fake news, by which they often mean honest criticism. Peddlers of falsehood in Zimbabwe now face 20 years in prison. The head of a COVID-19 committee under Khalifa Haftar, a Libyan warlord, says, "We consider anyone who criticizes to be a traitor." Jordan, Oman, Yemen, and the United Arab Emirates have banned print newspapers, claiming that they might transmit the virus. Now, I'll be honest, people, these are things that I should have covered, weeks ago. I did not realize any of these things were happening. They're banning print newspapers because they can transmit the virus. Now, on the face of it, that makes sense. That they're just trying to stop the virus. But people, look beneath that layer. Look at the amount of power that these governments can wield. So I encourage you to take a step back when you think about this stuff. So where does this lead? COVID-19 will make people poorer, sicker, and angrier. The coronavirus is impervious to propaganda and the secret police. Even as some leaders exploit the pandemic, their inability to deal with popular suffering will act against the myth that they and their regimes are impregnable. In countries where families are hungry, where baton-happy police enforce lockdowns, and where cronies pickings from the abuse of office dwindle along with the economy, that may eventually cause some regimes to lose control. For the time being, though, the traffic is in the other direction. Unscrupulous autocrats are exploiting the pandemic to what they always do: grab power at the expense of the people they govern. Okay, so we're going to be covering this, and frankly, I should have been. Charlie and I, we've done an injustice, because I like to think that we focus on these types of things. We're focusing on this too late. We should have been talking about this a month ago, to be honest. This is why I haven't talked about any numbers. I haven't talked about any coronavirus, specific things to the virus on the show right now. I'm talking about the slow-moving things that are going to be changed because of this virus, because I think these are very important things that we need to discuss here. So it's 2:02 p.m. I think I'm going to, I've got a lot here, people. So, I do want to riff quickly. Let's see if I can just kind of riff through this stuff. You know what? Let's just riff. We're going to see if we can get through all this in about 15 minutes. So here's what we got. I'm going to talk about Bernie endorsing Biden. I'm going to talk about the Committee for Responsible Federal Budget, talking about Social Security and Medicare running out. We're going to talk about what happened with the oil crisis, it's still going on. We're going to talk about why they went negative, what exactly that means. We're going to talk about the debt countries are racking up. We're going to talk about it quickly, and we're going to talk about It's Time to Build, a call to arms by Mark Andreessen, one of the most legendary venture capitalists. So we're going to riff through it really fast. I want to give this to you straight. I want to give it to you fast, and I want to give it to you in a short amount of time as possible, so you get the minimum effective dose. Okay, let's riff. Here we go. Lightning round. Let's be done by 2:20 p.m. Let's do this. Bernie endorsing Biden. Okay, so first of all, what's interesting? Good for Bernie to endorse Biden. No gradient. I endorsed Biden early on. I said, who else? What are we talking about here? He's the only one that can beat Trump. And good for Bernie to support him. It was interesting when Obama supported Biden. He talked about just as much as he was congratulating Bernie, just as much as he was talking about Biden. And what's interesting about that is I think that the burners, if you will, that fan base, people, they wield a lot of they have power over the conversation. So I think Obama in that endorsement was trying to pull a lot of them over, like don't vote for, get behind Biden. We got to do this to win. What was interesting is a lot of the burners in 2016, and I forgot the exact percent. We're shooting from the hip here again. A lot of them did not vote for Hillary Clinton, which is hilarious, because I think Bernie waited until like very close to the election to support Hillary, whereas he did not wait this time. He supported Biden, so I think he deserves a lot of credit. I'll tell you what, it is absolutely, I say yes, I'm endorsing Biden because I think he's better than the alternative. I think he's better than Trump, but it is a sad state of affairs that we have someone that has cognitive disabilities. Biden absolutely does, and he is who we're putting our trust in to beat Trump. The DNC, the Democratic Party, could not get a better candidate than Biden. It blows my mind, and it really saddens me. So hopefully in 2024 we have someone that's a little bit more interesting from the Dem side. Hell, the Republican side. I don't care about Dem or Republican. I care about, let's get someone in the White House that's competent. So it scares me that this is the best they were able to do, but better Biden than Trump. Full stop. That's what I believe. Okay, so here's some of the slow-moving stuff that's going on right now. The Committee for Responsible Federal Budget. It's this nonpartisan body that talks about federal budget spending. And they recently had a little rundown on Medicare and Social Security trustees recently released their reports. So this is the deal. The trustees' projections were formulated before the full impact of COVID-19 was apparent. Therefore, they do not incorporate an economic or health consequences of the pandemic into the projections. We would expect incorporating these effects to significantly lower payroll tax revenues in the near term. That's how these things are paid for. Which could accelerate the trust fund insolvency date and the other effects that may also noticeably change the trustees' projections. So they find Medicare Part A, which is hospital insurance. There's two parts. Medicare Part A is hospital insurance, will face insolvency in 6 years, and Social Security's trust fund will run out in 15 years. They project the Old Age and Survivors Insurance, OASI, trust fund will be exhausted by 2034. The Social Security Disability Insurance, SSDI trust fund in 2065, and the theoretical combined Social Security, those are both the funds combined will run out in 2035. And I encourage you, I always talk about on the show, read the source material. The trustees of Medicare, the trustees of Social Security, which is the official name, which I did not know. It's the Old Age Survivors and Disability Insurance. That's the official name. So OASDI is the official name for Social Security. The reports they release, you can read them. They have a highlight section that tells you exactly in pretty plain English with some numbers thrown at you what the situation looks like. I mean, granted, the 250 pages, did I read all of it? No, I read the highlights. But this stuff is accessible. So when you want to learn something, the first source, always go to the source if you can. Always go to the source. So here's what they said. So under the trustees' intermediate assumption, Social Security's total cost is projected to be less than its total income in 2020. So its cost is going to be less than its total income in 2020, and higher than its total income. The cost will be higher than its total income in 2021 in all later years. So after 2021, it's projected that Social Security will cost more than it brings in, and Medicare is in a similar situation. Now, I'll link to the official reports because we're riffing here. We got 13 minutes. The reality is that these I'm not crying chicken little here. These problems can be fixed, but we, as I said at the beginning of the show, we either need to lower the amount that these pay out, which isn't popular, or we need to increase the amount we put in, which also isn't popular. The sooner we change one of those factors, or a little bit of both, the sooner we can mitigate Social Security and Medicare running out. Do I think these funds are going to run out? Do I think they're going to stop paying out? No, but it needs to be addressed. And the sooner we address it, the better. The sooner we address it, the less change will need to be made later on. So it's an interesting this is a slow moving thing that I think is interesting. That's going to be over the course of the next decade. How does this stuff get funded? And one of the things they talked about, if the economy keeps getting bigger, and they talked about this in the report, they said if the economy keeps getting bigger, then it's going to be okay. But based on their projections, even with the economy getting bigger and a bigger share of payroll taxes being able to fund this, it's still going to outstrip that. And Social Security is kind of a bedrock of a citizen's, and Medicare, for that matter, are the bedrock of the safety net in the United States. For those funds to be in jeopardy, granted, several years out, but it is something. These are the slow-moving things I want to talk about. Okay, let's talk about this oil thing. So there's a great article. God, I forgot her name. I think her name was Helen. I forgot. I'll link to it. So let's talk about why oil went negative. So in fact, I was going to read how she did all this. Well, here we go. In a record-setting week, the price of a barrel of crude dropped to negative $37. That's right. A barrel of West Texas Intermediate crude to be delivered in May ended Monday below zero. The news prompted questions of how future contracts work and how this negative price affects us individually and economically. Okay, so let's talk about future contracts. So here's what she says. Future contracts allow buyers and sellers to lock in a price on an underlying asset such as oil for a future date. Each futures contract is standardized with a set quantity, expiration date, and predetermined price. The most important benefit of futures contracts is that they eliminate the price uncertainty of the underlying asset for both the buyers and the sellers. So you buy a futures contract, you get to get that oil at a specific date and a specific amount. Now, future markets are highly speculative because a trader does not have to pay the full value of a contract when entering it. Instead, the broker only requires a trader to deposit an amount of cash called initial margin amount that is equivalent to a small percentage of the full contract value. For example, let's say you buy one oil futures contract in June with the price per barrel at $22. A futures oil contract on Chicago Mercantile Exchange is 1,000 barrels of oil, so the total value of your one contract is $22K. Assuming the broker requires 10% as the initial margin, you can enter the contract for as little as $2,200. So, suppose you bought in anticipation of rising oil prices and turned out you were right. The price of a barrel increased to $32 2 weeks later. You can close your position by selling your contract with a profit of $10,000. Oil future contracts roll over monthly. Future contracts can be settled by buyers taking the physical delivery of the underlying asset on the expiration day. Now, this is where it gets interesting. However, since speculators are in it to make money, they don't care about the actual oil, they care about the price. And they either do not want to take the physical asset or have nothing to deliver. They usually try to get out of the contract before it expires by taking the opposite side of the trade. A buyer becomes a seller and a seller becomes a buyer. This also means price movements of the underlying asset can be extremely volatile close to the contract expiration day. So what happened on Monday? Tuesday was the expiration day of the May futures contract for oil. So on Monday, those who held long positions on May futures contracts, meaning on paper they agreed to buy oil but never intended to actually take physical delivery, were scrambling to get out of the contract. Here's the problem. The problem was that they found very few who were willing to buy these contracts because oil storage space is extremely limited. Our oil storage is basically full to the brim right now. No one in his right mind would buy something knowing there was nowhere to put it. So those who held the long positions had to keep dropping their asking price in order to offload. When everyone tries to sell, and if you wanted to buy, the futures price could only go one direction, down. So at the end of the trading session Monday, the May futures price fell below $0 to $37. It's just absolutely fascinating that this system could account for it and the whole thing didn't fall apart. Like the fact that, okay, well, the price is going to go down to zero and we're going to keep making trades based on that, bada bing, bada boom. It's fascinating. So that's what's going on. And that was one specific, that wasn't oil everywhere, right? We think about oil and the price. Well, there's different indexes that represent the price of oil. There isn't just the price of oil. There's different types of oil. There's different types of, God, I forgot the term, but there's different, it's not all created. It's not just oil. There's different types, there's different grades. So, and there's different in different areas where that actual oil is. Okay, so here's what we're going to talk about. We're going to talk about the debt countries are racking up to fight this. Okay, we got 8 minutes. Here we go. We're not going to beat that, but we'll be pretty close. Okay, and how to pay for the war. So this is an article by The Economist. There's pulling quotes from two articles. In How to Pay for the War, a pamphlet published in 1940, John Maynard Keynes looked back on the way that the British government had in the late 1910s tried to pay off enormous quantities of debt with a combination of higher taxes and inflation. Wages had not kept up with inflation, meaning that consumers' incomes passed into the hands of the capitalist class. Meanwhile, the rich, as bondholders, had benefit from the interest on the loans. This time, Keynes argued it would be better to take money from the workers directly by forcing them to lend to the government while the war was on, and there was little to spend money on anyway. Later, the government could pay the workers back the money they had lent it with interest. Using the proceeds of a substantial wealth tax. I have endeavored, Keynes wrote, to snatch from the exigency of war positive social improvements, which I think is an epic quote. Okay, so the American government is set to run a 15% deficit of GDP this year, a figure that will go up if more stimulus is needed. Across the rich world, the IMF says gross government debt will rise by $6 trillion to $66 trillion at the end of the year, or from 105% of GDP to 122%, a greater increase than was seen in any year during the global financial crisis. So we're talking about World War II levels here in terms of the debt to GDP. And there's different ways to address this debt. But first, I want to riff on just for quickly when people talk about who owns the U.S. debt, like, oh, China owns us, or like, they own all of our debt and they control us. Well, first of all, if China owns a lot of our debt, that doesn't mean they control us. That means that means they're in a weaker position than we are. Now, we're not going to default on those loans. We're the United States of America. But just to put it in perspective, who owns the U.S. national debt? So a lot of people don't realize 33% of the debt is owned by U.S. investors. So it's owned by people like you and me. It's owned by corporations. It's private individuals. So just 27%, $5.7 trillion is owned by the U.S. government. Like, for example, Social Security, that trust fund we were talking about, that fund. owns government securities. So that would be fall under the U.S. government, and they earn interest on those securities. The Federal Reserve also owns some. Remember, with their quantitative easing and their buying of bonds, they own 11%. So foreign investors own about 29%. So foreign investors own less of America's debt than U.S. investors. It's funny because this is money we owe ourselves, which is hilarious. And Japan and China top the list on the foreign investors. But it's important to think people are willing to buy U.S. debt because they trust the United States of America, and they trust that we will not default on our loans, and they trust that we will keep paying interest on them, and they trust the value of the U.S. dollar. So it's actually a powerful position that we're able to loan out money at such absolute rock bottom low interest rates because people trust the United States. So if let's see, and we talked about this last week, where as long as people, the number is 25 trillion, that's a super high number, and that's about what our debt is at right now. That number, that's irrelevant. Throw it out the window. It sounds super high. That's not what's important. What's important is that we can service the debt, we can pay interest on the debt, and it's not a huge percentage of the GDP. So in 2019, America spent 1.8% of GDP on debt interest, less than it did 20 years ago. So it spent even less on managing that debt than it did 20 years ago. So it's not as if, this debt we're going to cripple under it, everyone's screwed. No. If our economy gets bigger, it becomes a smaller percent of the GDP, and then we're okay. That's how it works. Okay, so they talk about 3 ways that we can get out of this, and then we're going to end with it's time to build. Mark Andreessen had an epic post, and we're going to riff on that. So first, here's the 3 ways that in this Economist article, which I'll link to, that you can pay back the borrowing, or not pay it back, but that's one of the ways. Here's how you can address the high level of debt. Here's the first. They say you can pay back the borrowing using taxation. Second, they can decide not to pay, or agree with creditors to pay less than they owe. So that's essentially defaulting on the debt, which isn't really an option. Third, they can wait it out, rolling over their debts while hoping that they shrink relative to the economy over time. And this is what Morgan Housel, this is what we talked about last week. This is what the United States will likely do. Yes, we can increase taxes. That's never popular. Or we can make the economy bigger. We can make that pie bigger, and it can be a smaller percent of GDP, or the debt can be a smaller percent compared to GDP than it was at this current time. So if the economy gets bigger, that debt gets smaller in relative terms. So that's I think that the single easiest way to do this. And the way to do that is to build. And Mark Andreessen had an epic post. Okay, 3 minutes. We're almost there here. But he had an epic post, which I remember. As soon as I read it, I said people are gonna get pissed off because this is a billionaire VC guy, and they're like, people are gonna get pissed off. Nothing he said here was controversial. He said we need to build new things. We need to build new companies. So let's riff on some of the things he said. It's an epic post. We'll also link to it. Many of us would like to pin the cause on one political party. He's talking about the response to the virus and why many Western countries were caught flat-footed. Pin the cause on the one political party or another, on one government or another. But the harsh reality is that it all failed. No Western country or state or city was prepared. And despite hard work and often extraordinary sacrifice by many people within these institutions. So the problem runs deeper than your favorite political opponent or your home nation. This isn't political. Yes, Trump was a jackass. Could we have done better? Absolutely. But this is bigger than just that. Even if someone else was in the White House, we would have still been caught flat-footed. We weren't set up to handle something like this. We didn't have the necessary supplies. Full stop. And part of that is Trump reducing funding with some of this stuff. Absolutely. But this is bigger. This is bigger than politics. Here we go. He goes on. He says, in the U.S., we don't even have the ability to get federal bailout money to the people and businesses that need it. Tens of millions of laid off workers and their families, and many millions of them. Many millions of small businesses are in serious trouble right now, and we have no direct method to transfer them money without potentially disastrous delays. A government that collects money from all its citizens and businesses each year has never built a system to distribute money to us when it's needed most. You see it in housing and the physical footprints at our cities. We can't build nearly enough housing in our cities with surging. It means they can't get the opportunities. That means that these innovative companies that are creating the future can't get the workers that they need. Housing is absolutely an important part of this. So he says this, you see it in education. We have top-end universities, yes, but with the capacity to teach only a microscopic percentage of the 4 million new 18-year-olds in the U.S. each year, or the 120 million new 18-year-olds in the world each year. Why not educate every 18-year-old? With the power of the internet, we have the smartest, we have all information online. We have lectures online. We have the smartest people having discourse online. The fact that the price of education not only has stagnated, but it hasn't gone down. It's gone up. It's gone in the opposite direction. Even though information has never flown more freely, it is absolutely absurd. So he says this. You see it in manufacturing. Contrary to conventional wisdom, American manufacturing output is higher than ever, but why has so much manufacturing been offshored to places with cheaper manual labor? We know how to build highly automated factories. We know the enormous number of high-paying jobs we would create to design and build and operate these factories. You see it in transportation. Where are the supersonic aircraft? Where are the millions of delivery drones? Where are the high-speed trains, the soaring monorails, the hyperloops, and yes, the flying cars? Peter Thiel has, kind of one of his famous things. He's a contrarian. I don't agree with everything he says, but I think he puts light on things people don't talk about. He says we wanted flying cars, instead we got 140 characters. So he's saying his famous post, The Future. He's basically saying that we are stagnating. Now I'm someone that I think society as a whole has never been better. You look back 100 years ago, you look at 50 years ago, we are on the right path. We are democratizing information. We're democratizing education opportunity more than ever before. We need to keep doing that. We need to keep going in that direction. But I think we need to do more. We're not doing enough. It could be absolutely so much better than it currently is. And then he says this, is the problem money? That seems hard to believe when we have the money to wage endless wars in the Middle East and repeatedly bail out incumbent banks, airlines, and car makers. And then he breaks up the left and the right. So he says this. He says politically, he says the right starts out in a more natural, albeit compromised place. The right is generally pro-production, but is too often corrupted by forces that hold back market-based competition. By the way, if you're on the right, listen to this. And then if you're on the left, you're going to get bitch slapped too. So it's important. The right is generally pro-production, but it is too often corrupted by forces that hold back market-based competition in the building of things. The right must fight hard against crony capitalism, regulatory capture, ossified oligopolies, risk-inducing offshoring, and investor-friendly buybacks in lieu of customer-friendly and over a longer period of time, even more investor-friendly innovation. It's time for a full-throated, unapologetic, uncompromised political support from the right for aggressive investment in new products and new industries and new factories and new science and big leaps forward. The left starts out with a stronger bias toward the public sector in many of these areas, to which I say, prove the superior model. Demonstrate that the public sector can build better hospitals, better schools, better transportation, better cities, better housing. Stop trying to protect the old, the entrenched, the irrelevant. Commit the public sector fully to the future. Milton Friedman once said the great public sector mistake is to judge policies and programs by their intentions rather than their results. Instead of taking this as an insult, take it as a challenge. Build new things and show the results. So people on the left, listen, show us that government can be the most efficient producer of goods, the most efficient, which, he's not. I don't think that'll ever be the case. But show us how good government can be. Get us to try. He gave an example of the VA hospital system. Why is that not the best? Why were they not the most prepared for this? Like, make these state of the art. Make these the best. So this isn't left. This isn't right. This is about we all need to hold ourselves more accountable. We all need to build more. Show that new models of public sector healthcare can be inexpensive and effective. How about starting with the VA? When the next coronavirus comes along, blow us away. Even private universities like Harvard are lavish with public funding. Why can't 100,000 or 1 million students a year attend Harvard? Why shouldn't regulators and taxpayers demand that Harvard build? Solve the climate crisis by building. Energy experts say that all carbon-based electrical power generation on the planet could be replaced by a few thousand new zero-emission nuclear reactors. So let's build those. Maybe we can start with 10 new reactors, then 100, then the rest. In fact, I think building is how we reboot the American dream. The things we build in huge quantities, like computers and TVs, drop rapidly in price. The things we don't, like housing, schools, and hospitals, skyrocket in price. Every step of the way, to everyone around us, we should be asking the question, and this is the challenge to you. What are you building? What are you building directly or helping others to build or teaching other people to build or taking care of people who are building? If the work you're doing isn't either leading to something being built or taking care of people directly, we've failed you. And we need to get you into a position, an occupation, a career where you can contribute to building. I expect this essay to be the target of criticism. Here's a modest proposal to my critics. Instead of attacking my ideas of what to build, conceive your own. What do you think we should build? There's an excellent chance I'll agree with you. So Ben Thompson, I love this. He also said, listen to this, and I love it, and I know we're going over, but here we go. Our nation and our civilization were built on production, on building. Our forefathers and foremothers built roads and trains, farms and factories, then the computer, then the microchip, then the smartphone, and uncounted thousands of other things that we now take for granted that are all around us, that define our lives and provide for our well-being. There's only one way to honor their legacy, our forefathers and our foremothers, and and that's to create the future we want for our children and grandchildren, and that's to build. Okay, so Ben Thompson, another person I talk about a lot, he was talking about this post, and he said this: how can we build more? He said, first, tech should embrace and accelerate distributed work. It makes tech more accessible to more people. It seeds more parts of the country with potential entrepreneurs. It dramatically decreases the cost of living for employees. It creates the conditions for more stable companies that can take on less risky, yet still necessary opportunities that may throw off a nice dividend instead of an IPO. And critically, it gives tech companies a weapon to wield against overbearing regulation, because companies can always pick up and leave. Here's what we need to do. We need to get to a point where we have the tools in place. We have the power of the internet. We need to get in a place where a villager in Africa, a villager in India, a villager anywhere, someone dirt poor has access to internet, and they are on an equal playing field with someone in a first world country. Granted, we're far from this, but with the power of the internet, people aren't fully grasping how powerful this can truly be. You can get access to a banking system. You can get access to all the sum of human knowledge. You can communicate with anyone in the world. You can learn from the smartest, the brightest, from anywhere in the world, as long as you have an internet connection. Now, we need to destroy borders with this. We need to flatten the barriers to entry. We're not pushing hard on this enough. Why is it the fact that you have to go into massive debt to learn, to get a college degree in this world? We have the means to teach every single person on the planet for a fraction of the cost than ever in the history of our species. They can learn anything they want with tools online. The fact that we're not going headlong into this, the fact that we're still relying on degrees as a form of signaling that you know something. We need to move away from this. It's not the way of the future. It's crippling people in debt, and it doesn't give us the best and the brightest. It focuses on people with connections. It focuses on people with money. We need to get rid of that as barriers to entry. Again, I'll know we've made it when anyone anywhere in the world of any ethnicity, any background, any wealth background, when they can compete with someone in a first world country, with the richest, the richest, the people with the most resources, that's how I know we've made it. We need to democratize the hell out of our work. We're moving in that direction. We need to be doubling down. We need to be moving faster. That's what I think. So I appreciate Ben Thompson on that point. So he says, second, invest in real-world companies that differentiate investment in hardware with software. This hardware could be machines for factories or factories themselves. It could be new types of transportation or defense systems. The possibilities, at least once you let go of the requirement for 90% gross margins, are endless. So this is a dog on tech. Where's money going into tech right now? It's going into those huge moonshot. What's going to give us the most moonshot returns? His point is, stop looking at the moonshot returns. And this is related above. Well, I'll put it in his words. Figure out an investing model that is suited to outcomes that have a higher likelihood of success along with a lower upside. This is truly the most important piece, and where Andreessen, given his position, can make the most impact. Andreessen Horowitz has thought more about how to change venture capital than anyone else, but the fundamental constraint has remained the assumption of high cost, high risk, and grand slam outcomes. We should keep that model, but surely there is room for another. We don't need to go for the 100x returns. We need to get that low hanging fruit. There's so much low hanging fruit right now. We don't even have to invent new things. We need to technology is hard to invent. Right, it's hard to innovate in things, but my point is we need to keep doing that 110%. But my point is we have the technology today to vastly improve our processes. I mean, look at what the coronavirus has done. Telehealth is all-time high. People are working distributed all the time. People are spending more time at home with their families. Now, granted, this is not all good, obviously, but we are seeing the power of the internet in full force. This has been a true test of the power of the internet, and I think we are just fucking getting started. I mean, look at your average person today, what they were doing, 40 years ago. Your average person commutes to work, they go to work, they come home, they go to the store to buy things, they come home, blah, blah. We are starting to see online shopping. We're starting to see people that are internet first workers, that it doesn't matter where they are. We're starting to see this, but the vast majority of people, it's business as usual. Why is the education model, the academic model in college and universities around the world, is to go to a specific location on planet Earth, to then go in classrooms and learn face to face. Now, granted, there's something powerful about face to face. I'm not saying get rid of all this stuff. I'm just saying there is room to give billions more, not just millions. I'm saying billions more access to the best education in the world that we're not addressing. And to Mark Andreessen's point about Harvard only admitting, a very small fraction and only educating the very small few. What about educating the fucking world? What about giving entrepreneurs, a way to compete across borders so that the opportunity can flow as easily as possible and flow to those with the most talent. Now, I think there's so much headroom for so much low-hanging fruit that we have that is untapped in this world, and I think it's up to us. It's up to us to demand it. It's up to build new things. Why is nuclear power not discussed? That's another thing. Why is nuclear power not discussed as a real? I mean, it is partly, but you don't hear about it. We're talking about climate change is the biggest, or as Elon Musk says, it's the biggest risk of all time. We're playing the biggest gamble of all time. We don't know these positive feedback loops of the environment, these with greenhouse gases. We don't know we are playing with absolute fire. And if you look at previous climate events, and you look at how quickly the climate has changed based on features of the environment, small changes in the environment, it's been cataclysmic. So we are playing with fire right now. Why are we not talking about we're not moving fast enough? We need to demand that our entrepreneurs and don't raise $300 million for WAG, a dog walking app. Throw that money at fucking nuclear energy. Throw it at something that's gonna give more opportunity to more people. It's not just all about Fukin software. So I like Ben Thompson's take on that, and I think we're moving towards a future that is good, but we have to demand it. We have to build it. We are the only ones that can make this happen, because we're the only humans on Earth, and it's on us, people. So I appreciate you coming out, and I appreciate this was a big moment for No Gradient, for Shooting from the Hip. Me and Charlie are super pumped to have those 3 interviews with those 3 legends. That was fucking epic. It was an honor that they came on. So I thank you both again. I encourage you, again, one thing, if you only get one thing from this show, is that look at the slow-moving things. Don't spend time reading about the things that will be irrelevant in a week. Spend time on the things that are going to be relevant in a decade. Work on the things that are going to be relevant in a decade. I'm not just saying read about data. I'm saying invest your time into things that you're going to want to be doing in a decade. Take an example. I want this show to be huge in a decade. I'm going to work on it. I'm going to chip away at it. Don't think short term. Think in the long term. Work on things that you want to be working on in 10 years, because you chip away at it. That's the way it works. And if you focus on the things that are going to be relevant in a decade, if you focus on them now, we talk about them now, like we do on this show, like that me and Charlie keep focusing on, about the slow-moving things, not the little pitter-patter of the duck. Don't look at the little duck's legs. Don't look at the little feet below the surface. Where's the duck going? Follow the fucking duck. That's what we do on this show. We shoot from the hip and we follow the duck, because the little feet, you get caught up. It's exhausting following the feet. And frankly, it's not that interesting. Where's the duck moving? What are these slow-moving fucking rhinos? What are those events that are unfolding that we need to appreciate and that we need to look at, and that we need to learn about? So when the time comes, the No Gradient audience is ready, we're informed, we're ready to address it, and hopefully well before we're ready to address it, we'll be talking about it before. I really think there's a vacuum in the way people discuss things, and me and Charlie really think there's a vacuum in the way modern news works. We don't think we're the only good source here. That's why we constantly link to other things. We constantly link to The Economist. We constantly read what other people are saying, because we don't think we're the smartest here. In fact, we think the opposite of that. We admit that we don't know, so that allows us to go grab these sources. So that's what we do on this show. We want to inform you by finding what the smartest people are saying and giving it to you, and focus on the things that are going to matter in a decade. Okay? That's what matters. That's what's important. So I appreciate everyone checking this show out. If you're new, I appreciate also on Patreon. If you want to support the show, become a contributor. You get full access to the show notes, even more than you get, access than you get. I get on the podcast page, or on the YouTube description. There are plenty more notes. There's also other perks I'll show you on the podcast. If you become a contributor, just contribute monthly. We're not break even. We'd really appreciate if you become a contributor. Addition to Alexa, no degree to 10,000 people for one job. What differentiates them? Moreover, if there are no degrees in 10,000. Okay, so I like this. Hold on, I love this. Right as the outro, I'm gonna answer this one question, then we're good. Okay, so someone said many academics in all fields already offer their works online for free, in addition to their lectures. Moreover, if there are no degrees and 10,000 people apply for one job, what differentiates them? I think I think that's a good point. I think we need a way to show competence without paying $250,000 for 4 years of education. I think there may be potentially one, and that Peter Thiel's talked about, is potentially something kind of like a call it, I don't know if it's a test or it's something, but what I'm saying is the model needs to change. I'm saying corporations need to not just look at these people coming out of these top universities, because they're going to be missing the best and the brightest, because a lot of times the best and the brightest are not going to these universities. I think increasingly we're seeing, look at computer science, look at software, look at engineering. If you can build, you can get a job. Granted, having a little Boston College next to your name, like I was fortunate enough to have that is going to help. I'm not saying we need to throw college out the window. That's not what I'm saying. And I commend them for offering a lot of their stuff online for free. I'm saying we need a new system that doesn't require you to go into non-bankruptcy. You can't default on your student loans. It's an insane thing. It's an insane strain this puts on young people, that they go into huge amount of debt just to signal that they know a certain thing. Come on. Information's free. It's never been so cheap. We need another way to signal that we're fucking competent, or that we can do a job. And we need to ask ourselves what those questions are. Can I challenge you? Certainly what we're doing now is not the fucking answer. To pay $250,000 at one of these top universities, is that really the best we can do when information is free? I understand 200 years ago that kind of makes sense, but right now, come on, we can do better. We can all do better. Look in the mirror, make a change. Michael Jackson. That's all we can do. So I appreciate everyone coming out. We do this show Saturdays, noon Eastern. Charlie Finch Finley in the chat room. We do it on Periscope. We do it on YouTube. We do it on Facebook. We do it on Twitch. No one watches on Twitch. That's chill. Come on out. We also, wherever you get your podcasts, check it out. Just search No Gradient. Thank you all so much for coming on. Really appreciate it. Had a lot of fun. Until next time, we're going to keep focusing on those slow moving things. We're going to keep thinking about the future. We're going to keep talking about the things that are going to matter in a decade, not matter in a week or 2 weeks. Those things are going to come and go. We're going to look to that horizon line. Thank you all so much for joining. Really appreciate it. We had an epic show. Thank you. Riff.